Told him to put on his video. He's already there.
Good afternoon, sir.
Good afternoon, ma'am. How are you doing?
I am good, sir.
Nice to connect with you,
And
ma'am.
yes, sir.
Yes.
It's our pleasure to now you are taking session for our members today.
Thank you. My pleasure, ma'am. I'm also very closely associated to FIEO. Like I'm one of the MC members, so it's also my duty to definitely, hold such knowledge sessions for our members so that
Thank you, very much, sir.
they can benefit the most from this, ma'am. Sure. Thank you, ma'am. Thank you.
Recording stopped.
Ma'am, I think we should start, if you may permit, because participants will keep, it's already 10 minutes past 3 p.m. So participants will keep on joining. So we may start, ma'am.
Fine.
We should, because they'll keep on
Formally
joining.
welcome to Shri Ishan Tulsian. Good afternoon, sir. Members of the trade and exporting community, ladies and gentlemen, and very warm welcome to all of you on behalf of FIEO for today's session on GST audit readiness, rules and regulations, recent developments and key issues for the EXIM industry. GST has now completed 9 years since its implementation in July 2017 and has become an important part of the day-to-day operations of exporters. With regular changes in GST provisions, procedures, technology, it is important for exporters to remain updated and ensure proper compliance. For the exporting community, GST is particularly important as it is directly connected with refunds, input tax credits, export documentation, foreign remittances, reconciliation of information across GST and ISGate and other systems. While technology has made compliance and data verification easier, exporters continue to face practical difficulties such as refund delays, data mismatches, IT-related issues, foreign remittances, documentation, GST notices, and departmental audits. We have been also receiving so many queries, issues from our members. At times, technical or data related mismatches may also result in unnecessary queries or delays. Therefore, we organized today's session is aimed at making GST compliance simpler and more practical for our exporting community. This session is also part of FIEO's continued efforts in this area. In fact, I just would like to inform you that FIEO regularly organizes two-day training workshops on GST on a quarterly basis, covering important provision, research developments, and practical issues relevant to exporters. We will shortly share the dates of our next program. Alternative participants may visit the FIEO website www.fio.org and check the domestic section for details of our upcoming programs. We would request our guest speaker, Shri Tulsian, who is the CA and a partner of R.Tulsian and Company LL.B, a 6-decade-old multinational chartered accountancy firm and with offices across India, Bhutan, USA, Qatar, Oman, and Saudi Arabia. With over 15 years of professional experience, Sir specializes in GST advisory litigation, US taxation,
चलो
valuation,
या देख लेते हैं
audit and assurance services, and heads of the firm GST valuation, USA taxation, Bhutan taxation and audit practice division.
Recording in progress.
Tulsian is a fellow chartered accountant, company secretary, LL.B, holds a diploma in international taxation, secured all India rank 2 in DISA, and has a master's in applied finance from Singapore Management University, a BCom honors from St. Xavier College, Kolkata. Sir, also, sir, he initially discussed with me as a National Managing Committee member of FIEO, member of its national and regional committees on GST and indirect taxes, and is co-chairman of indirect taxation and GST subcommittee of the Bharat Chamber of Commerce. Sir is a regular speaker and faculty of ICAI, NACIN, RTI at CNEG, FIO, EPC India, BCC, and other leading trade and industry bodies. Sir has delivered 100 plus professional seminars and training programs across India and is frequent commenter on tax and economic matters in the television and print media also. We would request to sir to kindly cover during his presentation the key GST provision, recent development, relevant to exporters, along with the practical aspects of GST audit, preparedness, maintenance of records, documentation, ITC, the eligibility and reversal, refund claims, reconciliation of GSTR 1, 3B, 3, 2B, and EV bill data is gate related issues and foreign emergency BRC fire requirements. I know it will be very difficult to cover in 2 hours, but try to convince the exporters and please take queries from them. It would also be very useful if the session could cover common mistakes made by exporter time to time issues which generally arise during departmental audits of GST inquiries, and the precautions that exporters can take to avoid notices, disputes, and unnecessary blockage of working capital. We also look forward to understanding how exporters should deal with data mismatches or technical issues where the exporters has otherwise complied with the requirement, as well as some practical examples and case studies wherever possible. Our objective today is not merely to understand the provision but to help our members comply correctly, avoid common pitfalls, and manage GST related issues more effectively in their day-to-day export operations. Just would like to give the short brief about FIEO. The FIEO is the apex body representing Indian exporting community. Continuously works to bring exporters closer to the government, regulatory authorities, and domain experts. Through such knowledge sharing and interactive programs, we endeavor to keep our members updated on policy changes, address their practical concerns, and facilitate smoother and more compliant export operations. I'm also happy to see participation from exporters and business from different parts of the country, including some participants who may not yet be in FIEO members. We would be delighted to welcome you all to in FIEO family, sir. FIEO has a network of 17 offices across the country, though through which we regularly support exporters through knowledge sharing programs, policy advocacy, trade facilitation, business opportunity interaction with various government departments and international stakeholders, organizing RBSM, BSMs, international events. Details of our office are and membership are available on the FIEO website. And our team would be happy to assist anyone interested in becoming part of the FIEO family. Before I conclude, I would also like to mention that we will have a question and answer session after the presentation of Sir. Participants may raise their hand if they would like to ask a question, or they may also type their question in the chat box during the session. My colleague Mr. Arnav Chakrabarti will keep track of the questions and coordinate them for the QA session after the presentation. We are confident that today's session will be highly useful and provide our members and participants with practical guidance and greater clarity on the various GST related concerns. Once again, I extend a very welcome to Shri Ishan Tulsian and all our members and participants. I thank you all for taking the time to join us today and wish everyone a very fruitful, informative, and interactive session. Thank you.
Thank you, ma'am. Thank you so much for your for setting the tone for today's discussion. On that note, I would request our faculty for today, Mr. Ishan Tulsian to please take forward the proceedings for the session. Sir, if you may please proceed with your speech and presentation, please, sir. Thank
Thank
you.
you. I'll just share my screen. Just a moment. Is my screen visible? Can you please?
Yes, yes, it's visible.
Thank you, ma'am. I would like to extend my heartfelt gratitude for such a generous introduction of me and for a very erudite description of the agenda today and what we should cover. And we would stick to that. We would not make it a theoretical discussion, as ma'am said. We would try to make it interactive. So I will keep asking questions, post questions. Kindly please do reply in the chat box throughout the session, and then we can have a dedicated question and answer session at the end of my presentation after that, so that the momentum of the particular presentation is intact. So I tried to make a very thorough presentation which has more than 250 slides. So this presentation I would share with FIEO, which will be in turn shared with all the participants. I would like to welcome each and every participant, delegate, exporter, for having taken out time on a weekday. Today is Friday, from your busy time to upskill to learn new changes about GST, how to keep our books of accounts ready for audit for 2025-26 and the way ahead for 2026-27. Thank you, Mr. Anna, for the seamless coordination. And without further ado, let us go ahead. So today's topic is GST Audit Readiness, Rules, Regulations, Recent Amendments, Developments and Key Issues for the EXIM industry. Okay, so currently we are in the month of August, right? August 2026. Now we are in a place wherein our tax audits are happening under Income Tax Act. For listed companies, our accounts have already been shut, have been closed for 2025-26. For our private limited companies, our accounts are being closed, are being finalized and are being closed for 25-26. We have to file a tax audits by 30th of September. Then moving ahead, we have our the 30th of November deadline for the last return for October 2026 GSTR 3B and GSTR 1 returns, wherein we can do the rectifications or any corrections of any omissions pertaining to any of our outward supplies or input tax liability, inward supplies pertaining to 25-26. And then we have our GSTR 99C return due date for 31st of December. So we are in the month of August. It's a very well placed month for all our finance professionals, for our exporters, our business owners who have joined today to understand. Initially in the presentation, I would go ahead and take you through each and every aspect, important aspects, about the GST audit. Means it can be, you can see from the perspective of GST audit under section 65, which is invoked by the department. You can also see from the perspective of self-correction or annual reconciliation before 30th of November 2026 pertaining to 25-26. You can also see from the perspective of that, sir, for our annual return of 9 and 9C for 25-26, we would want to make all these corrections and see these areas in our books of accounts. Or you may also see from income tax perspective, like our tax audits and ITRs, right? So it is a very crucial time, and let us go ahead. Okay, we will first go ahead with the outward portion, outward sales portion, where which areas, focus areas, vulnerable areas which we need to focus on in outward reconciliation, means the sales which we are making as exporters in the EXIM sector. So let us see the first area. We need to prepare finance professionals or our tax department of our company, exporters, accountant, chartered accountant, whoever have joined today. We need to start off with books versus GSTR 3B versus GSTR 1 reconciliation. If you are to see this particular screen, here we have, just a moment. If you can see the particular screen here, we have the outward supplies and tax liability month wise. You can see for 24-25, you can see for 25-26 also, which is what we have reported in our GSTR 1 return versus what is there in our books of accounts. It can be any software, and what is there in our GSTR 3B, which we've reported and paid pertaining to 25-26 versus what we have reported in our books of accounts. Again, we have month-wise reconciliation of taxable value of sales and our output tax liability, which we have reported in our GSTR 1 returns of 25-26 versus vis-a-vis what we have reported and paid in our GSTR 3B returns for 25-26. Now, I have put a particular highlight here. If you were to see this 305 each of CGST, SGST, output tax liability has been short paid in GSTR 3B vis-a-vis or in comparison to what we have reported in our GSTR 1 return. Let us take, for example, this is for 25-26 or even for 26-27, the ensuing financial year. What will happen, as we are aware, there may not be any adjudication under section 73 or 74 or 74. It means no show cause notice may be issued in this directly. You may receive an automated notice on your GST portal, which is DRC 01B. Right? This is for sales. Any sales discrepancy between GSTR 1 and GSTR 3B, you will receive an automated GST notice in DRC 01B read with Rule 88C. What does this mean? This means within 7 days in Part B of the form, you need to respond or either make the payment voluntarily in DRC 03 with interest, or you respond that, sir, these are the valid reasons, and they will let it go. In case if you do not respond, then what will happen? Within after 7 days, if there is no further response, your GSTR 1 for the particular month may be blocked. If your GSTR 1 is blocked, your GSTR 3B cannot be filed for that particular month. If your GSTR 3B for a specific month, for example, for the month of July 2026 is not filed, you cannot file GSTR 1 for August 2026. And if you do not file your GSTR 1 for 2 consecutive months, we may not be able to generate our e-way bills, right? And for 6 months, if we do not file a GSTR 3B or GSTR 1, our GST and registration may be cancelled. So what I'm trying to say, as exporters, we need to undertake these reconciliations, not just now. Our first step should have been, we should have taken this reconciliation in the month of March 2026 for the entire year 2025-26. Then we need to make again mid-year when our tax audits are happening. Then again we should make this particular reconciliation of sales and taxable value and output tax liability close to your November 30th November, right? For any rectifications or doing corrections of any omissions for 25-26 data of sales and for your output tax liability for 25-26, which can last be done up to 30th of November 2026, right? And then again, we obviously do these reconciliations and refer to these at the time of filing a GSTR 9 and 9C, right? So this is a must. Second area which we all should see is that the reconciliation of e-way bill versus our sales, which we have reported in our GSTR 3B. This is the cherry picking point for departmental audit commissionates. Now, this is a real life attachment notice to an ASMT 10, which is a scrutiny notice, or maybe to a DRC 01A pre-show cause notice, or maybe DRC 01, which is a show cause notice. So this is an attachment, right? Now in this attachment, if you were to see, this is from the perspective of your sales, your output tax liability and your outward supplies. So if you were to see here, you have the liability of outward supplies as received from e-way bill data. The amount here, as per your waybill data from your waybill portal, is 35,83,499. This is the amount of IGST output tax liability which you should have paid in your GSTR 3B. This 88,21,470 of CGST on your sales you should have paid for your for your financial year 25-26, for instance. But how much have you paid in your GSTR 3B for your entire financial year 25-26? You have paid 35,32,254 to the shortfall of 51,234 of IGST and 26,370 of your CGST and SGST. Here, this may not actually be a short payment of tax in your GSTR 3B. This is as per the department's analysis of your output tax liability, which is reported in your waybill portal across all your e-way bills generated as an outward supply for 25-26 financial year, compared to the tax amount and compared to the output tax liability which you have reported on your sales in your GSTR 3B for your financial year 25-26, for instance, for your entire 12 years. Let us do a reconciliation statement. See, you do not need to submit case laws here, or this is not a legal point, this is a factual point. So as a response to your ASMT 10, a scrutiny notice in your ASMT 11 online, or maybe to your DRC 01A, you need to respond. This is a pre-show cause notice. It's an intimation. You have to respond in part B of your DRC 01A. Or if this is a part of your DRC 01, which is a show cause notice, you need to respond in DRC 06, right? So what do you respond? This is a reconciliation statement. What have I mentioned here? We need to not just prepare this as a response to the notices which we may receive in the future. This should be a preemptive measure during the year, or maybe at the end of the financial year 25-26, or maybe during the financial year, the subsequent financial year. We should prepare this. Now if you were to see, we have put initial liability of on your outward supplies as per e-way bill portal. As per e-way bill portal, this should have been the tax which should have been paid as per the department. I have placed it here, and this is the tax which you have actually paid in DRC 03, which is towards the end here. All right. So here, if you were to see, I have made additions and subtractions, and I have tried to reach the output tax liability from your way bill portal to your actual GSTR 3B returns, whatever you have actually paid. Now, see, there are certain transactions where way bills are not to be generated, but those are your GST turnover transactions. Those are your outward sales, outward supplies, such as, for example, if you are having service sales. In case of service sales, you don't need to issue your e-way bills, right? So no e-way bills have been generated here. So we are going to reach from this output tax liability amount as per our way bill records to reach our actual output tax liability which we paid in our GSTR 3B for 25-26. We need to add the output tax liability which we have paid on the service sales, right? Because these particular service sales, they do not entail any issue of e-way bills, right? So these particular amounts of tax payments in respect to service sales are not a part of our numerator here, right? So we are going to add this here. Now there are certain other thresholds which are there. There are, in case, for example, in West Bengal, up to 1st of June 2026, the intrastate sale, there was an exemption of 1 lakh rupees threshold. If you do not exceed that 1 lakh rupees of invoice value, you do not need to issue a particular way bill, e-way bill, right, in West Bengal. But it got reduced to 50,000 from after 1st of June. In Maharashtra, it is 1 lakh. In different states, your intrastate threshold limit of your per transaction of invoice value to determine whether e-way bill is to be generated or not is different across states. But mostly it is 1 lakh or 50,000, right? You can check, your state particular circular. Now, in case if you have any invoice value of outward supplies intrastate which is below 1 lakh, in those particular sales you do not need to issue or generate e-way bills, but those are part of your actual sales which you made in your GSTR 3B. So you're going to add those particular output tax liability, right, to reach here. Similarly, for any interstate transactions, if your output tax liability threshold for a particular transaction, that particular invoice value, if it exceeds 50,000 for interstate, right? So interstate supplies for goods or for goods, right? So you need to generate a particular e-way bill in that particular case. But if it is below 50,000 interstate, you don't need to generate an e-way bill. So these are separate. This is a reconciliation statement which you need to prepare. Similarly, for credit notes, if you have return of goods, right, you have sold and you have return of goods, and those goods are valued below 50,000 rupees of invoice value, interstate, or 1 lakh rupees of intrastate, depends on state to state. So that credit note, that sale reduction or the downward adjustment of your output tax liability has been made in your GSTR 3B, but you have not generated any way bills. So in that particular case, the output tax liability as per your e-way bill data is more, because your credit notes are not factored in here. So we are going to reduce this here. So whenever the presentation is there with you, kindly go through this slide meticulously and you can understand. The client did not have to pay a single penny for this particular around 1 lakh rupees of tax notice plus interest plus penalty because of this reconciliation. Kindly do this reconciliation. Now the third reconciliation is e-invoice reconciliation. Now we are aware that in case if we have an annual aggregate turnover from financial year 2017-18 onwards till 2025-26, the last financial year, if the annual aggregate turnover exceeds 5 crores in value, then we need to issue what? we need to issue an e-invoice, right? So an e-invoice needs to be issued. In case if we do not issue an e-invoice, then what will happen? There is a penalty on us. In case if we do not issue an e-invoice, where we have to issue an e-invoice, there is a penalty of 10,000 rupees or 100% of the tax amount as per Rule 48 sub Rule 5. And the second whammy will be that the recipient, your recipient, who is purchasing the goods from you, in case if you make any domestic supplies, in that particular case, that particular person will not be able to claim the input tax credit on that. It's a big problem. So we need to ensure that all our invoices, if we are duty bound or if e-invoice provisions are applicable on us as per Rule 48 sub Rule 4, that we need to generate the e-invoice for each and every our sale, each and every sale invoice. Now, whenever we issue an e-invoice, we are aware that the IRN details, the 64-digit IRN, the alphanumeric 64-digit unique number, it gets auto-populated in your GSTR1, right? It gets auto-populated from your e-way portal in T+1 days, right? So, in case if it is not auto-populated, or in case if you have not generated your e-invoice, you need to ensure that you ensure that an e-invoice is generated, because you are safeguarding then the input tax credit, the right of your recipient also. Now there is second rule about e-invoice is, in case if you have an annual aggregate turnover of more than 10 crores, from when this has come into force from 1st April 2025. So if you're an exporter, your export turnover plus exempt turnover plus domestic turnover plus non-GST turnover plus all the types of turnover taken together, which is annual aggregate turnover, if it exceeds 10 crore, right? So in that particular case, you need to also ensure that the e-invoice or the IRN, which needs to be generated on the IRP portal, invoice registration portal, it should be done within 30 days from the date of the invoice. In case if it is not done so, then again you have your penalties. You will not be able to generate your IRP portal will not accept a particular invoice which is dated after 30 days for it to be, for an IRN to be generated. So in that particular case, what will happen? It will not be considered, your sale will not be considered as a valid sale. Your recipient will not be able to claim input tax credit, and you may be subject to this particular penalty, right? Now there is another, you see, in case if you have any questions, please do mention it in the chat box here. See, for e-commerce export, here there are certain exemptions for the issuance of e-invoice. So for banks, for GTAs, for passenger transport, multiplexes, SEZ and government departments. Apart from these, you need to generate an e-invoice for all your B2B transactions. You need to generate for all your credit notes, debit notes of B2B transaction, exports under LUT or bond or with payment of IGST, and all the credit notes, debit notes related to that. But for B2C transactions, you may not require to do so, right? Now, the next, you may post your questions, we will take it up towards the end, not a problem. Okay. Now, the next area of reconciliation of focus areas of sales or reconciliation of outward supplies is, you need to ensure that the sale amount, your total sale amount for 25-26 or 26-27 or for any financial year, that needs to match the amount which is reported as per your IT portal, income tax portal, which is your 26AS or AIS or TIS versus what is reported in your GSTR 3B portal. Now you may say that, sir, why are you bringing income tax in GST Act? Now let me mention this to all the participants that for several years now that the GST department has already started sharing data of the taxpayers, the GST and register the taxpayers, what is their total turnover for the particular financial year, what is reported in their GSTR 3B. That is shared with the income tax portal, that is shared with the IceGate portal, that is shared with the e-way bill portal, that is shared with your e-invoice portal. So all of those things are integrated. So there is free data interchange. Okay. Here in this particular case, you need to see, this is an AIS, annual information statement. What is an annual information statement? This is a statement you can download from your e-filing portal of your income tax, right? For your particular business. In that particular annual information statement or taxpayer information statement, TIS or 26AS, you will see that you have total turnover detail here, 5 crore 32 lakh 57,491. Why is there a turnover Here, this is the sales reported as per GSTR 3B. So there is direct data interchange, right, between what you have reported in your GSTR 3B returns for financial year 25-26. This is reported or mentioned in your AIS statement, annual information statement, which contains what? Ideally, it contains the AIS, TIS, 26As. It contains the details of your TDS, TCS deducted advanced tax payments under Income Tax Act, not GST Act. But now the integration is to the extent that they have the monthly details of your they have the monthly details of your GSTR 3B turnover. They also have the details of all your input tax credit which you have availed against each suppliers of yours and their GST and which period and against which invoice that you have claimed what input tax credit. So if you are reporting something else in your GST return and in your ITR, income tax return, or your tax audit, if you are reporting some other turnover, there would be a notice which would be awaited from both the departments. So kindly ensure you download your AIS, TIS, 26CS, and you ensure that the turnover reported there as per 3B matches your turnover as per your GSTR 3B for the particular financial year. Extremely important. Now, another reconciliation area is GSTR 1 versus GSTR 7 versus GSTR 3B. What is GSTR 7? Can anyone tell me what is GSTR 7 in the chat box? Kindly please mention what is GSTR 7 or who files it, or what is this point in relation to? GST TDS? Are we aware of GST TDS? Can anyone write in the chat box? Have you heard of GST TDS, TDS on GST, section 51? GST TDS. Yes, very good. Thank you for the interaction. Let us interact. Yes, 2%. Yes, on government transaction. Extremely good. Gaganji, very good. MDI, very good. Yes, it's GST TDS. So, if you're an exporter and a government contractor, now what is happening? You are our clients or taxpayers across India. They are receiving notices from the GST department, or these points are being caught in the where in your GST audit. What is being caught? That if you are a government contractor and if your invoice value, if your taxable value is more than 2.5 lakh rupees, so if you are supplying goods to the government and if you are an exporter also and you are supplying goods to the government and the taxable value, not the invoice value, taxable value is more than 2.5 lakh rupees, so what happens? The government, to ensure that there is transparency, traceability of the movement of government funds, they deduct 2% TDS, 1% CGST, SGST, or 2% IGST in whichever case. And what do? That particular 2% is deducted on the taxable value. Okay, on the taxable value, if your taxable value exceeds 2.5 lakh rupees for government contractors. Now that particular 2%, what happens? Where does the government deposit that? Where does the government deposit that? The government deposits that where? In your cash ledger. So how is it deposited in the cash ledger? The government department, central government, state government, or PSU, where central government, state government have more than 51% stake, or any local body, they are going to file their GSTR 7, right? They are going to take a different registration for TDS reduction, and they are going to file their GSTR 7 within the 10th of the next month. Then they are going to report that we have received these particular purchase invoices, and these are government contractors. We are deducting 2% on their taxable value, and once they file the GSTR 7, there will be on your dashboard, you are going to go and you can accept that TDS 2%. You can accept that TDS in your GST portal, that okay, that the government department has filed the GSTR 7, it has come to my GST portal. At my end, I'm going to accept it. 1% have accepted. Now once we accept it, what happens? There is GSTR 7A which is issued, which is an automated TDS certificate, right? We are aware of this, right? Now, for example, here is the taxable value is 2,65,000. So 2% of that is 5,300. So this amount directly goes to your electronic cash ledger. Now, what is the point which we need to see? Point of audit. The point of audit is that many people, exporters and domestic traders or manufacturers, they forget accepting the TDS requests which have been automatically generated at your portal after filing GSTR 7 by the government authority. So they have filed and you have not accepted that. If you have not accepted, that particular GST TDS will not come to your electronic cash ledger. So if you accept a particular GST TDS for which the sale you have made in 2024-25 and you are in 25-26. So in August 2025-26, you see, oh, I missed this, and you are going to accept it then. So what happens in your electronic cash ledger for your August 2020, for example, August 2025, the sale is pertaining to 2024-25, but the particular 2% TDS, GST TDS is appearing in August 2025. So when your GST for your financial year 25-26, whenever the audit is happening or whenever you are checking or your chartered accountant is reviewing your electronic cash ledger, he may ask that, sir, there is a 2% GST TDS deposited in your electronic cash ledger. Where is the sale? So it's like there is no sale in 25-26. No, but the sale has already been reported in your GSTR 1 and 3B and in the books of accounts of 24-25. Kindly ensure that whenever you have accepted a TDS, GST TDS of 2%, sale has been reported in GSTR 1, 3B and the amounts match. Right? So kindly ensure that if in the current financial or maybe in the previous financial year, because during GST audit, the department checks this, that whether you've reported this particular sale to the government department in your GSTR 1 3B or not. Secondly, you should also check that the GSTN of the deductor, the person whom you have sold to, the government department, maybe the panchayat or whoever, whatever, the government department PSU, that PSU, the same GSTN is appearing in your sale invoice, is the same GSTN which should appear in your GST TDS certificate. This is a practical issue. Many exporters and many taxpayers, they report that, sir, we sold to, for example, Indian Railways. For example, we sold to Indian Railways of Maharashtra, but our GST TDS was deducted from, for example, Uttar Pradesh GSTN. So in that particular case, it may be challenged by the departmental audit officer that you may not be able to use this particular 2% because this is incorrect. So you may have to ask your government department, your Indian Railways of Maharashtra, to amend GSTR 7, right, accordingly and report it correctly. Now your next particular area is goods in transit. So if you were to see goods in transit, what is goods in transit? We need to ensure, see, this is a particular audit point of a client of ours wherein it is mentioned that for this one particular point there is interest payment of say 12,000 and IGST of 36,000. So this one point entails an interest payment of 60-70,000, right? What is this point? This point is that they are saying that these particular purchase invoices of yours, you have purchased goods as an exporter, you have purchased goods on 24th of, for example, 24th of May 2022, right? But your goods have actually, your e-way bill is being expired in the next month on the 4th of June 2022, or your goods have been received on the 4th of June. But you have early claimed your input tax credit, where in the month of May, whereas you should have claimed that input tax credit on your purchase invoice in the month where the goods have been actually received. Are we aware of this particular the condition to claim input tax credit, section 16 subsection 2 clause B of CGST Act? We should only claim the input tax credit in respect of a purchase of goods or services in the month where we have availed or received the goods in our registered place of business or in our additional place of business, right? So in this particular case, in case if we do not have proper good receipts notes, GRN, if we do not have proper explanations, we may have to, and if we have claimed the input tax credit in the next month, in the month of June, so there may be an incidence where you may have to pay an interest of early claiming of input tax credit of how much? 74,250 into 18% divided by 1 by 12 means 1%, 1.5% of 74,520 you may have to pay in interest. And we know in interest we cannot use our electronic credit ledger, we need to pay by cash. So what is the audit point here, or the point of internal control for exporters, that whenever there is in the last 10 days of any month, whenever there is a purchase invoice, we need to ensure that if the goods are received in the same very month, we need to have very robust documentation. What are the robust documentation? We should have GRNs, we should have store receipts, we should have store records, we should have payment slips dated the day when we are receiving it, we should have stamp, we should have photos of the GTA or the trucks unloading those particular goods, We should have those particular e-invoices, e-way bills. We need to have all those particular records too, so that in the future, whenever there is a GST audit, that the department cannot contest and say that, sir, you have claimed the goods in the same very month, you have claimed the input tax credit on the goods in the same very month of your purchase invoice, but the goods have been received in the next month because your e-way bills are being expired in the next month, right? So you can say that, sir, e-way bills can be expired in the next month, not a problem, but I've actually received the goods in the same month. So kindly ensure that you have all those documentations with you. Otherwise, you may have to pay interest of 1 month, right? The second thing is that this is again another point which several clients, exporters, they receive all over India, which I've seen, is that as per the DGGI or intelligence or the movement of goods and vehicles, the department during audit or investigation, they mention that, sir, these particular vehicles have not crossed a particular toll point. So if you are purchasing goods which are interstate, for example, from Maharashtra to West Bengal or from Karnataka to Maharashtra, right? So in that particular case, we need to ensure, see, this is a particular annexure B which is attached to that particular audit point, wherein the goods have been originated, the supplier is there in Jharkhand, right? This is 8, right, pin code, and here the recipient of the supply goods, he is there in West Bengal. So here the department is saying, as per our intelligence, these particular vehicles have not crossed against these particular invoices, against these particular inputs which you have claimed. These vehicles have not crossed a toll point, interstate toll point, and we have evidence. Kindly provide and discharge your burden of proof under section 155. So you need to discharge the burden of proof mentioning, no sir, I have received these goods, I have the logistical and physical movement, I have the e-way bills, I have the payment slips of the supplier and myself, I have the supplier's address, I have the vehicle logs, I have the freight payments which I have made to the GTAs, I have the consignment bilty, or I have the consignment notes, right? I have the GRNs, I have the store receipts. So all of those data would be very crucial in the future. So why should we prepare this in retrospect whenever a notice comes in? We need to keep our internal controls, our internal systems robust and strong, so as to ensure that whenever a truck comes in or a lorry comes in or a GTA comes in, we have all of these internal controls set, and we need to keep all of these documentation. Kindly ensure for at least 6 years from the due date, from your annual return due date. For example, for 25-26, what is the GST and 99C annual due date? The due date of filing of 99C, it is 31st of December 2026, right? So 6 years from 31st of December 2026 is how much? Is when 31st of December 2032, right? So up to 2032, 31st of December, you need to keep all of these documentations with you, or 1 year from the closure of any investigation or any case which is any proceedings which are happening. This is as per section 36, right? So we need to ensure, see, we also, for litigations and representations, we also download from the Parivahan website the vehicle log RC status, that the vehicles exist as on the date of transportation, right? Now, physical stock versus book stock, we need to ensure that at any given point in time, if the department comes with an INS 01, which means an investigation notice, so what was the first thing? Of March 2025. So for this particular finished good, you had 49 units of finished good recorded in your books of accounts as on 18th of March when they did the inspection. And how much finished goods was actually available on the production floor ready for dispatch? It was 51. So 2 finished goods were not accounted for, means production voucher, production journal voucher or journal entry was not passed. So these particular 2 finished goods, 2 units of finished goods, they have the right to confiscate. So they release 49 because 49 units of these finished goods matched with the particular production entries which had been passed as on the date, right? So now what is the learning from this? The learning from this is that you should ensure that your purchase entries are made every day by your accounting team. You should ensure that your production entries are passed every day by your accounting team. You should ensure that from time to time you do reconciliation, you match your physical stock with your book stock, and if there is any discrepancy, kindly ensure you do so before an inspection comes to you, because in case once they've confiscated this, they have the right under section 130 to confiscate, because where any person who does not account for any goods which is liable to pay tax, and they have reasons to believe under section 67, they have reasons to believe that the goods liable for confiscation have been secreted in any place, and if they are of that opinion, they can go and they can do inspection, right? So they have the power to seize and confiscate the goods. So extremely important, so that you do regular reconciliation. Secondly, thirdly, the point is the department, the government officers, they are going to carry out the stock audit in 8 hours, for which we ourselves, we are going to carry out it properly in scientific method. It would take us a week. So the methods which the department uses, that is also challengeable. So kindly ensure that at all points in time, see, there is rule 56 also as per CGST rules. Rule 56 sub rule 7, it mentions that you can have e-records also. Section sub rule your rule 56, if you were to read rule 56, sub rule 7 is there, sub rule 10, sub rule 15, sub rule 16, all those things, if you would read, you would see monthly production records of qualitative, quantitative details of raw materials, quantitative details of your production finished goods should be recorded in your books of accounts and available at your principal place of business, available at your additional place of business, either in e-copy, e-records, or maybe manually. This is a must, because if you don't have these records, your entire stock can be seized, as that had happened for our client. 8 crores worth of stock got seized. Then they had to file a writ, and only partial stocks were released in this release letter, right? Next area is advance adjusted and advance receipt and adjusted. So here there are many exporters which I see the clients. What happens is, can anyone tell me in the chat box, in case if you are an exporter and if you are having, for example, any domestic supply, for example, and you have received any for example, your supply of goods was worth of 5 lakh and your IGST was of 90,000, right? So 5 lakh 90,000, against that you received 2.5 lakh rupees plus GST. So do you need to, this is an advance, you have not supplied the goods, it is the month of August 2026, you will supply the goods in the month of September 2026. You have received advance against the supply of goods. Do you need to pay GST? Kindly please respond in the chat box. Do you need to pay GST? No, very good, Nayanji. Extremely good. Very good. You don't need to pay GST. Very good, Uditji. You don't need to pay GST on any supply of goods against which an advance has been received, because this has been rescinded as per notification 66 2000. As per notification, I think 66 2017 is there, 66 or 95 or something like that, from your 14th or 15th of November 2017. So currently you need to only discharge your GST if you've received advance against the provision of service. So in case if you're an exporter and you're providing any supply of service domestically, for example, so in case if you've received 2.5 lakh plus GST, or if you've just received 2.5 lakh in the month of July 2026, but you have not supplied the service which you will supply in the month of August 2026. So in the month of July, what are we going to do? We are going to report that particular 2.5 lakh, we are going to gross this up. 2.5 lakh divided by 1.18 into 18%. So that 18% amount, whatever that amount comes to, 35-40,000, we are going to pay tax in table 3.1A of our GSTR 3B, and we need to report it in table 11A as per unadjusted advances. And in the next month, when we are going to actually supply the service, we are going to issue the invoice of entire 5 lakh plus 90,000, right? 5 lakh 90,000. So in that case, what happens? We need to make this particular, we need to report the unadjusted advances which we have reported of 2.5 lakh. We are going to nullify that in the next month, in the month of August 2026 GSTR 1. So 2.5 lakh reported in 11A in July 2026, nullified by 2.5 lakh reported in 11B, because now we have issued the invoice, so nullified. Then we are going to issue the sale invoice of entire 5 lakh and 90,000 in our table 4A of our GSTR 1. GSTR 1, right? But in GSTR 3B, we shall not pay again the entire 5 lakh. we shall only pay the remaining 2.5 lakh and GST on that. That is the critical point. Reason being, many exporters we have seen, they make once they issue the particular invoice in the month of August 2026, they will issue the invoice on the entire amount, which is entirely wrong. You issue the invoice on the entire amount, you report it in GSTR1, but you pay tax on only the remainder of the amount. The invoice under your Rule 46, Section 35, all of those things will be issued on your entire 5 lakh and 90,000. That is fine. But the tax which needs to be paid in GSTR 3B table 3.1a needs to be paid only on the remainder 2.5 lakh plus GST, right? So this is extremely important. We also, this is an extract which I have taken of GSTR 9C, wherein the advances, unadjusted advances at the end of the year, they form a part of GST turnover. But is it a part of our audited turnover? No, it's a liability, right? Advance which we've received, it's a liability in our books of accounts. So we are going to add here, if you see, we added the unadjusted advances at the end of the financial year to match our audited turnover with our GST turnover by adding the unadjusted advances at the end of the year, and vice versa for beginning of the year. We've reduced that, right? Now, see, this is a particular case wherein what happens if, for example, this also, many times what happens is, in case if we are purchasing any goods, interstate goods from Karnataka, for example, to West Bengal. So the invoice, the place of supply shall be the destination of goods, right? Wherein it will be West Bengal. And the supplier's registration is there in your Karnataka. So it's an IGST, interstate transaction, right? But what happens is, the invoice is correct. Here, the place of supply is West Bengal, state code is 19, IGST has been charged, consigner address is correct, everything is correct. You have also paid, the recipient is also paid IGST. But what happens is, your supplier, when uploading this particular sale invoice in his GSTR 1A, at that point in time, what happens? By mistake, inadvertently, he mentions the place of supply to be Karnataka. So what happens is, this particular purchase transaction of yours, when it is reflected in your GSTR 2B, so what happens? Place of supply should be West Bengal, because that is the destination of your goods, but it is reported to be Karnataka. So what happens is, the location of the recipient, which is you, is outside the location or the state of the place of supply. So the place of supply of the goods is outside the state of the recipient of the supply. So in that case, it becomes an ineligible credit. You will not be able to claim that input tax credit. So until 30th November of the next year, kindly do ask your supplier to make that particular amendment in his GSTR 1. And if 30th November has passed of the succeeding year, then what happens? You need to take an undertaking. So this is a litigated issue, right? You need to take an undertaking that the particular change has not been made in GSTR 99C also up to 30th November also by the supplier, but you have paid the correct IGST, you have the correct invoice, all the conditions under section 16 subsection 2 of claiming input tax credit you have satisfied. You have the invoice under section 16 subsection 16.2a, which is correct. 16.2b, you have received the goods in West Bengal in your factory. 16.2c, that the tax has been paid by the supplier to the government. 16.2d, you have filed your GSTR 3b. 16.2 AA, which is that the particular invoice is appearing in GSTR 2a, right? So this, we have fought this particular case also, and we've received a favorable order from as at the commissioner appeals level. These are certain safeguards which we have taken. Now, this is a very common issue that in case if this particular case was an interstate transaction where the goods had been sent from Karnataka to West Bengal, what happens is, by mistake, if for me this was an interstate transaction, but I have reported it to be an intrastate transaction where in my GSTR 1 and GSTR 3B. So what happened? I had to pay how much? I had to pay 60,000 of IGST, which is an interstate transaction from Karnataka to West Bengal, but I paid 30,000 of CGST and SGST. I showed it as intrastate transaction in my GSTR 1 and 3B, and I paid the incorrect tax. Now, this is a very common case which exporters they face. So, in this particular case, what should we do? In this particular case, there is a relief. There is section 77 of CGST Act, Section 19 of IGST Act. What it mentions, that there is no interest incidence, that you have not paid IGST for these many years, but you have paid CGST and HGST. So Section 77 and Section 19 respectively says you don't need to pay any interest on the short payment of IGST. And today, go ahead and make the correct payment of 60,000 of IGST in your DRC03. Kindly make that correct payment today and kindly apply for refund of this 30,000 erroneous payment, which is not in the nature of tax. So as per Article 265 of the Constitution of Act, any amount collected by the government not in the character or nature of tax is an advance, right? It is not a tax, so it is liable to be refunded. So you can apply for refund. There is refund provision also. There is Rule 89 1A. So you apply for what? You pay the correct tax today of 60,000 of IGST, apply for refund of 30,000 of CGST and HGST within 2 years from the date of the payment of tax today. So even if this particular case may be pertaining to 2022-23, you made incorrect you made incorrect CGST HGST payment, but you have made the correct payment in 2026 during GST departmental audit, you can still get the refund within 2 years from 2026. You can apply for refund within 2028, and you don't need to pay any interest or penalty on this, but you need to pay the correct amount of tax. So this is a very beneficial provision. There are circulars also which I have mentioned here, and notification 35/2021. There is this Rule 89 sub Rule 1A also, which mandates such a refund. So we have covered the output portion of this, the outward supplies. So you can go through these. See, spillover effects are also there, which we need to eliminate. Spillover effects means my turnover of 25-26, which is reported in my financial year to GSTR 1 and GSTR 3B of financial year 2026-27. I can do so, right? Up to when can I report my issue a credit note or report any short sale or claim any input tax credit pertaining to 25-26? Can you please mention in the chat box? My question is, up to when can I claim an input tax credit, issue a GST credit note, make corrections of omissions or rectifications pertaining to 25-26 in 26-27? Up to when can I do so in my GSTR 1 and 3B returns? Can you please respond in the chat box? Am I December 27? No, this is 30th November. Mr. Gagan, this is not December 2020, it's 30th November, absolutely correct. So, 30th November is the last date, means your October GSTR 3B and October GSTR 1 return of 26-27. You can make all of those changes, claim that input, etc. All of those things. So, it's very important. We take into consideration all these. You can go through this, all of these things. See, fixed asset sale also, when you are checking see from the audit perspective as an exporter, whenever you are, what are you seeing? If you are selling, this is your fixed asset register, which is a part of your balance sheet. If you are making any disposal of what? For example, plant and machinery. I am disposing plant and machinery of with sales consideration of 46,000. So we need to ensure that we apply the valuation rule for the sale of any fixed assets. So as per GST Act, Section 16, Section 18, Subsection 6, there are two rules wherein we need to calculate what should be the amount which we need to pay on the sale of any fixed asset. For example, there is Rule 44 sub Rule 6, right? For example, here if I have sold a particular plant, right? Plant and machinery, I claimed it. When did I purchase it? On the 1st of July 2017. My invoice value was 2,36,000. I claimed 36,000 when? In July 2017. When did I dispose this? I disposed this in 1 year, 10 months, 10 days. Right? In 23 months, I disposed this. Now, can anyone respond and mention for how many years is it assumed that there is the useful life of any fixed asset in under GST Act from the perspective of input tax credit? Can anyone mention in the chat box? 5 years. Very good, Uditji. Very good. So 5 years. So now what happens is, let us see the next slide. 23 months have passed. 37 months is the unvested period. So I shall calculate the proportionate ITC, which for against the unutilized period. So 37 months I have not utilized the fixed assets because I have sold it in 23 months only.
So 22,200, 36,000 was the input which I had claimed initially. So proportionate input tax credit for the unutilized period, not utilized period, it is 22,200, right? This again, one more valuation method is there which takes 5 percentage points for every quarter, right? So this is also one of the methodologies where we can calculate the amount which we need to reverse the input tax credit. So whichever is higher. If today we are selling the old plant and machinery for how much? 1,44,550, right? So the tax 18% is 22,050. And as per the valuation rule, the reversal of input tax credit for the proportionate period of the unutilized period of the plant and machinery is 22,200, whichever is higher, 22,050 or 22,200. It is 22,200 is higher. So we shall make the payment of this is our output tax liability divided by 18% is our taxable value. So whether this has been carried out in all our disposals which we have mentioned here in our fixed asset register. Also, can we claim input tax credit against, for example, plant and machinery if it is movable or immovable? If there is an immovable plant and machinery, can we claim input tax credit? Can you please mention? Immovable plant and machinery, can we claim input tax credit? It cannot be moved. Nitesh says no. Anyone else? Can you please respond? In case if it is immovable, attached to the earth, cannot be moved, can we claim input tax credit of plant and machinery? Actual plant and machinery. Can you please respond? Yes, very right, correct. We can claim. So for plant and machinery, we do not need to check whether it is movable or immovable. That is section 17, subsection 5, clause D, the block credit section. It mentions what is the block credit section mentioned. The block credit section, we will see later in the slides, it mentions that plant and machinery is the exception in case if it is even immovable and capitalized. But if we are constructing a building, if we are renovating a building, if we are doing paint, if we are building a mezzanine floor, if we are doing all of those things on our own account, right? So in that particular case, if we are capitalizing to our building account any renovation or any expansion or purchasing or making payment to the builder, for example, before the CCS come out, can we claim input tax credit of that? No, we cannot claim, because that is immovable and it is also capitalized. But in case if I paint, if I do some repair and maintenance, if I put some lights, CCTV camera, and if I capitalize it, if it is movable, let us not take paint, but CCTV cameras, lights, those are movable and we have capitalized it also. So movable items, fixed assets, we can claim input tax credit even if it is capitalized, provided it has business nexus to our business, right? It is related to our business. Now my next question to you is that in case if I for example, I put grills, I put windows, I put cabinets, those are permanent fixtures, right? I cannot move it, it cannot be unbolted, and I cannot take it away, it's not portable, and I've not capitalized it and I have expensed it in my books of accounts as repair and maintenance, and it is related to my business. Can I claim input tax credit in that case or no? Can you please mention yes or no? Yes, very good, Falguni ji. Very good, Udit ji. Very good. So any amount which may be plant and machinery is the exceptional case. We can claim input tax credit on the purchase or construction of plant and machinery and its foundation, even if it's immovable or movable. So that's aside. Second is, in case if there is an immovable property and we are doing renovation, construction, or any amount which we are spending on an immovable property and it is capitalized in our books of accounts. So, and if we are doing so on our own account, so it is blocked under section 17(5)(d). But if we are doing so and if we are expensing it to our repair and maintenance or to our any expenses account, we can claim the input tax credit of that. But again, there may be a challenge as per the accounting standard, because accounting standard, 10, or the relevant accounting standard, they may not allow you to expense off certain capital assets for which you may derive benefits more than 12 months. So that may be a problem from the accounting perspective, but not from the GST perspective, right? Okay, for car, if you make sale of motor vehicle, so in that particular case, there is margin method. We need to follow this valuation rule. We should know this from an audit perspective as an exporter. today if I'm making sale of my second hand Mahindra Thar, for example, I've been using it for business. I have not claimed input tax credit under erstwhile central excise and VAT, neither in the GST Act, right? So today's sale value of my depreciated asset is 6 lakhs, and the depreciated value as per Income Tax Act, not Companies Act, not any other act, but as per Income Tax Act, the depreciated value, WDV, written down value is 4 lakhs of this particular asset. If it's a part of the block of asset, you need to take that out, and you need to calculate depreciation of 15% right from the very beginning of time, from the date of purchase. So as per Income Tax Act, the WDV as on the date of sale, it is 4 lakhs, right? So there is a positive margin. You need to pay 18% tax. Earlier, for smaller cars which were below 1200 cc, small cars, Santro, Wagoner, or less than your 1200 cc of engine, or less than 4000 means smaller than 4 feet. So that was 12%. But from January 2025, the rate has been made uniform with all the other categories also, SUVs and the large cars is 18%. So 18% of 2 lakhs. But if it's a negative margin, means you're making a loss when selling it, there is no GST on that. Kindly ensure that. Now, indirect incomes. We need to ensure that there are many times what happens that we may be getting money, for example, of a rental income in our savings bank account, right? Here, for example, our business turnover is 12 crore 96 lakhs, but I am working as a proprietor, for example, or partnership, and I have given out on rent or lease any property, and I am taking that particular amount in my savings bank account or some other bank account, not business bank account. So many times we forget adding this particular rental income. It should also be subject to GST, because you are carrying out business from the same GSTN or PAN, right? So you need to also ensure all other sources of funds which you have received in your savings bank account, current bank account, all the bank accounts of your business or of your own, in case if you're running a proprietorship or a partnership, right? And that particular case, if the GSTN is the same, right? In partnership, the GSTN may be different, but for a proprietorship firm, basically, this particular point is relevant, that you may have to add this. You need to check whether all the amounts which you have received as commission or any other amounts, they have been subject to GST. There are many times where smart accountants, what they do is that the credit realizations like packing charges, loading, unloading, which is a part of our assessable value for sale. For example, I'm selling goods of 100 rupees, 5 rupees loading, unloading, 2 rupees packing, 3 rupees transportation. So I recover these 10 rupees along with 100 rupees. So I show my top line sale as 100 rupees. But what do I do? That particular 10 rupees packing charges or other freight charges, what do? I take that and those are credits, those are my income subject to GST. But I take that and I set it off against debit expenses, the debit side of my PL, against these expenses of freight and against packing expenses. So that is, you may do so, that is window dressing, but GST needs to be paid on any realizations which are a part of your assessable value, maybe in the same invoice or maybe as a debit note later on. So kindly ensure, this is a very important crucial point for finalization, that all your credit entries which you are taking, which you have set off against your debit side as of your expenses, those are also subject to GST. Now ITC 04, in case if we are sending our goods out for job working. So for example, if I am a textile trader, I've sent out my goods to my job worker and for embroidery or for printing. That person does the embroidery and printing, okay, and he needs to send back my particular fabric within 1 year. In case if he does not do so it will be a deemed supply of sale from the principal manufacturer, which is the exporter, which is me. From when? From the date of sending out the goods, and we have to pay interest from that date. Means entire 1 year of interest we need to pay, and we need to show it as a sale. For capital goods, it's 3 years. So we need to file an ITC 04. This form, have you heard of this form? ITC 04. Have you heard of this form? Yes. Okay, we have heard of this form. Yes, Uditji, thank you for confirming. We've heard of this form, ITC 04. Mayankji, thank you. So ITC 04, how is it relevant? First of all, the rate. We are aware that after 22nd of September 2025, the GST 2.0, the rates for your job working earlier for residual was 12%. This is extremely crucial point. It got changed to 18% for the residual part. So you need to ensure that all the invoices which you are receiving from your job worker, after 22nd of September 2025 till date that the GST rate is not 12%, it is 18%. If it is 12%, so you can still ask your job worker to amend that particular sale invoice in his GSTR 1 and pay that tax. He pays that tax, he collects that tax from you, he's collecting 12%, that's wrong. You need to pay 18% to him. He will collect 6% from you, pay to the government, amend his 1 and 3B, make the payment to the government, and then you can claim that extra 6% in your GSTR 3B, right? So this particular notice, if you were to see, this was before 22nd of September 2025. In that particular case, inadvertently, the job workers had issued invoices of 18%, vice versa case. Whereas the department has mentioned that no, the job workers before 22nd of September 2025 for residual cases cannot issue a particular job working bill of 18%, it should be 12%. So for this one particular point, this extra 6%, the department asked for reversal of close to 1.5 crore just for this particular one point, plus interest plus penalty. Plus, this is another point for a client of ours wherein he was not maintaining ITC 04. Means there was no record that the goods were actually going to the job worker and it was actually coming back within 1 year. There's no record, there's no delivery challan out, there is no inward delivery challan, there is no ITC 04, there is no job worker register, there is nothing. So what is he mentioned? The department contested that all the input tax credit which you have claimed against the invoices of your job working, kindly reverse it. This one particular point was close to 1.5 crore. Or the department may say that all the goods, the value of which you have sent out for job working, it will be deemed supply and you have to pay tax at the rate of whatever the slab is. So this is extremely crucial. We need to file ITC 04. This is practically how ITC 04 should be. This should be the delivery challan, principal manufacturer, he needs to mention. The challan date needs to be there. The quantity needs to be there of the shirt, fabric, goods, whatever it is. Now, this is your table. This is your table 4. For table 5A, this is your table 5A. So, each inward delivery challan which you are receiving as a principal manufacturer should be tagged with your outward delivery challan, original delivery challan. It should be tagged with your inward delivery challan raised by the job worker, and the goods quantity needs to be matched, and these needs to be filed, right? Now you can go through all of these things. Let us go and see the inward side. So for the inward side, we are aware that we cannot claim input tax credit more than what is there in our GSTR 2B. Can anyone mention from which date? Can anyone mention from which date? If my final product, sir, we'll take the question later on, sir. Can you mention from which date is GSTR 2B is a part of the law and one of the conditions to claim input tax credit? Can anyone mention in the chat? 14th. No, sir. From which date? Like, from when did section 16 subsection 2 clause AA read with rule 36 of rule 4 come into force in the legal being? 1st of January 2022. So from 1st of January 2022, we need to ensure that the input which we have claimed in 3B should not be more than 2B. In case if it is, then what will happen? Automated system generated notice will be issued in DRC 01C read with rule 88D, which will mention that kindly respond and why is the amount which you claimed in 3B more than your 2B within 7 days, or otherwise your GSTR 1 will be blocked, 3B cannot be filed and your business will come to a halt, or make the payment in DRC 03 along with applicable interest, right? So second is we need to ensure that ineligible ITC is not claimed in GSTR 3B. So we are aware of the reversals, we are aware of circular 170, right, which came from August 2022, wherein in GSTR 2B, whatever input tax credit is there, eligible, ineligible, it gets auto-populated in your GSTR 3B, table 4A5, right, table 4A, right? So entire 2B input, block credit, ineligible credit, exempt, whatever related credit, everything gets auto-populated in table 4A, right? So in table 4A5, all your block credits, everything is mentioned. Now, you know that there is a car service or car insurance or car purchase input tax credit that is blocked under section 17.5. So you need to reverse that. First, you need to claim it in 4A5, which is auto-populated from GSTR 2B for that particular month. Then you reverse it as a permanent reversal in table 4B1. We are aware of these. These are basics which I am just repeating. And there is a table 4B2 for temporary reversals. We are aware of this temporary reversal, right? Temporary reversal comes in which cases? Where the goods have not been received. in that particular month. We just saw that particular point initially in the presentation, right? That the goods have not been received in July 2026. Goods were actually received in August 2026. So, can I claim the input tax credit in July, or should I claim it in August? I will claim it only in August as per section 16 subsection 2 clause B, the month in which I have actually received the goods. So, in the month of July, what will happen? My 2B is auto-populating table 4A5 with that credit, but can I claim it in my books of accounts in the month of July? No. So I reverse it temporarily in table 4B2. And now this 3B is for the month of August, right? Now for the month of August, I can now claim that, reclaim that particular input tax credit where? In our table 4A5 by hand, right? And report it in table 41. That we are reclaiming the temporarily reversed input tax credit which was reversed in the previous month, but now I satisfy all the conditions to claim input tax credit in the month of August 2026, and I am claiming it in my table 4A5 and reported in table 41, right? So these are just basics which I am repeating. So we need to ensure that all our block credits, they have been reported in table 4B1. Now ITC reversal as per rule 37. Now, can anyone tell me about the relevance of 180 days in GST Act? There can be a timing difference. That's very good. What is the 120% rule? So 120% rule, we will take it towards the end. If you are mentioning about the automated system generated notices, so for DRC 01C, DRC 01B, there is a 25% variance. If more than that, if you have short paid in 3B, more than 25%, or if you have overclaimed in 3B more than 25% of what is appearing in 2B, then you may have that system generated notice in DRC 01B and DRC 01C, right? We will take all the questions towards the end, but kindly please confirm what is the relevance of 180 days in GST Act. Payment before 180 days. Very good, Gaganji. Very good, Uditji, for payment. So in case if we do not make payment within 6 months from the date of our invoice for against each purchase invoice, so what do? We need to temporarily reverse the input tax credit in the next GSTR 3B return after 180 days elapse in table 4B, where in table 4B 2 here. And whenever I make the payment of my outward of the supply as well as the GST, I will reclaim it. How I can reclaim it in table 45 and report it in 41. Can anyone tell me what is the time limit of reclaiming? For example, I'll take an example. August 2026, currently, I have purchased goods worth of 1 lakh rupees, 9,000 I have paid tax. Now I have not made payment of 1 lakh 9,000 up to February 2027. 6 months have gone. Means September, October, November, December, January, February. 6 months gone. I reverse the input tax credit temporarily in table 4B2 when in month of March, table 4B2 and GSTR 3B. Now I make the payment when after 30th November 2027. I make the payment, for example, in December 2027. Now, can I reclaim that 9,000 rupees which I have temporarily reversed in March? In March, GSTR 3B table 4B2 temporarily reversed. Can I reclaim it in table 45 and 41 in the month of December 2027? Yes or no? In annual returns filing, yes, no. Let's take the example. If I make the payment in January 2028, not in December 2027. Now my question is, if I make the payment of 1,09,000 in January 2028, can I reclaim the input tax credit in table 4A5 and table 4D1? Can you please respond? Can you please respond in the chat? Yes, very good, Kejriwal Castings. Very good, Mayank ji. Very good. We can reclaim. So, Rule 37 sub rule 4 read with section 41 sub rule 2, right? There is no time limit for reclaiming. We have also seen in section 16 subsection 4 time barring of 30th of November for claiming of input tax credit. There is no time barring of reclaiming of input tax credit. When did we claim it? We claimed it in table 4A5 by auto population from GSTR 2B. When? In the month of August 2026 itself. So if you've claimed it before 30th of November 2027, what's the problem? Reclaiming, there is no time limit. Very good. So we need to ensure that, because in the departmental audit, the bank account statements and your creditor aging analysis will be taken by the tax officers, the audit officers, and they will mention that, sir, as per FIFO method, you've not made payment. After 180 days, you made payment, you shall have to pay your interest. See, these are real life notices. Real life notices. There's one more point which I would like to mention. 37A, Rule 37A. Can anyone tell me what is Rule 37A? If today, in the month of August 2026, I have made sale of 1 lakh rupees of goods and 9,000 I paid the tax. Supplier has not filed his GSTR 3B return for the month of August 2026, and he has not filed it when up to September 2027, up to 30th September 2027. Hypothetically, after 6 months, so as it is, it is suo motu cancellation after show cause notice issue for the supplier. But hypothetically, he has not filed, and his GST is also active. He has not filed his GSTR 3B return of August 2026 up to when 30th of September 2027. So what do I need to do? I have to reverse the input tax credit of 9,000 rupees. I have to reverse the input tax credit of 9,000 rupees. How? By 30th of November 2027. I have made purchase of 1 lakh rupees from a supplier. Right? I have paid 9,000 to him. He's not paid 9,000 to the government. He's not filed his 3B return of August 26. I will check up to when? 30th of? I will check up to 30th of September. So if I check up to 30th of September, if he has filed his GSTR 3B, no requirement of reversal of input tax credit. But if he has not filed his GSTR 3B return up to the following 30th September, I will reverse the input tax credit in my October GSTR 3B return before 30th of November. If I do so, I don't need to even pay interest. So for the amount which the government has not even received from the supplier from August 2026, I can claim the input tax credit legally up to 30th September 2027 for free without paying interest. If I make the reversal of that particular input, if he has still not filed his 3B up to 30th of November. Right? This is Rule 37A, extremely important. So how will we check that? See, these are notices where we need to ensure that if the supplier has not filed his GSTR 3B, if it is no, how will we come to know? Column number 18 of GSTR 2A, we put a filter and we see the supplier 3B filing status. If it is no, kindly reverse it only after 30th of September, but before 30th of November. You can voluntarily do so now also, but there is no legal mandate. Also, for the month of September means 2 months later, for the month of September, when you will file your 3B, there will be a GSTR 2B on the 14th of October which will be generated. There will be a table 5 of that GSTR 2B of September which will be generated on 14th October. There will be a table 5 mentioning all of these ineligible input tax credit against which the supplier has not filed his GSTR 3B. And you need to reverse that pertaining to 25-26. So this is extremely important and crucial. See, these are all real life notices. 180 days. He has made belated payment. He had to make the payment when? He had to make the payment. Payment date was 6 December 23. When did he make the payment? He actually made the payment. Date of invoice was no. The payment date was in 2023. But he had to make the payment when? By 2022. For example, February or August or something. These are the delays. 2 years, 3 years delays. So he paid interest. He does not need to reverse the input tax credit because it is a belated payment of value of supply and GST amount to the supplier. So he needs to pay interest. For this one particular point, he needs to pay interest of 30,000 rupees. Similarly, similar notices are there. Also, in case if you have written off any sundry creditor balance, means that will be your other income in the credit side of your PL. In that particular case also, in case if you have claimed input tax credit when you had on the purchase invoice, but now you are writing it off, means you are never going to pay him 180 days or not. You need to reverse the input tax credit. Many people, they don't even know that on writing back means booking income or remission of liability of sundry creditors, you need to make the payment of you need to reverse your input tax credit. So for this one particular point, you have to pay 1,30,000 of tax plus interest plus 15% penalty. Now, electronic credit reversal and reclaim statement. Are we aware of this? This is an extremely important statement. Have you heard of this? Electronic credit reversal and reclaim statement. 180 days calculation from. So we'll take all the questions towards the end. I'll solve each and every question of yours. Don't worry, I won't go without solving any of your questions. Right? Please answer my question. Have you heard of electronic credit reversal and reclaim statement? Yes, Udilji, very good. Kindly please respond. Other participants, have you heard of this particular statement? Is this Greek Latin to us, or have you seen something? Have you seen this earlier? Electronic credit reversal, Kejriwal, Castings, Gaganji, yes, very good. Now, what is electronic credit reversal and reclaim statement? My goods were received in the month of August, but this electronic credit reversal reclaim statement is for the month of July. So I need to reverse temporarily that particular input in the month of July in table 4B2. So I've temporarily parked my input in the month of July in table 4B2, and in the month of July I have reclaimed the input tax credit against previous reversals, temporary reversals, and I have reclaimed more than what I have reversed temporarily. So that's why the closing balance of electronic credit reversal and reclaim statement has become negative. Should it become negative means I am temporarily parking 9,000 rupees against 1 lakh rupees of purchase, for which the purchase invoice is dated 29th of July 2026. The goods were received on 4th of August 2026. I will reverse that 9,000 in my July GSTR 3B table 4B2, right? So it should be 9,000 here, right? And I am reclaiming in the month of July. For example, there is no opening balance. In the month of July, what is the maximum amount which I can reclaim in the month of July? Up to 9,000. If I reclaim 10,000, then there will be a negative balance. Is negative balance, can we now file GSTR 3B returns with a negative balance of electronic credit reversal and reclaim statement? Means I have temporarily parked 1 lakh rupees that today I am not eligible to reclaim this input tax credit. Maybe in the future I am eligible to reclaim this input tax credit. I reclaim more than what I have. I reclaim 2 lakh rupees. I have reversed 1 lakh temporarily. I reclaim 2 lakh. Is that justified? No. But can I file my GSTR 3B returns with this error today? Can I file or no? Gaganji says no. Kejriwalji says no. Can I file? Means is there hard locking? Is there hard locking? I am saying, is there hard locking of GSTR 3B filing if there is a negative electronic credit reversal and reclaim statement? Kindly please respond. Is there hard locking, or can we file with a warning? Is there a warning only, or can we, or they do not allow currently? Can file. Very good, Uditji. There is a warning, we can still file, but we may not have this luxury in the coming time. This is an advisory or an analysis done by me from January 2026, wherein it was mentioned that in case if there is any negative balance of electronic credit reversal and reclaim statement, there will be hard stop validation. You cannot move ahead to file your GSTR 3B. You can't file your 3B, so you can't file your 1 for the next month. You can't file your 1 for the next month, you cannot file your 3B. 2 months GSTR 1 not filed, e-way bills you can't issue. You can't file e-way bills, your business comes to a stop. So this particular amount being negative, your business can be stopped. It is that crucial, these slides. So kindly please pay attention to these. These are extremely important. So here in this example, let us see the ideal opening balance of electronic credit reversal reclaim statement should have been 10. Means our earlier temporary parking of input tax credit in 4B2 in GSTR 3B earlier should be 10. It is minus 15. Means I have reclaimed 25 more than what I have temporarily parked before the beginning of this month of July 2026. For the month of July 26, everything else is correct. In table 4A5, 70 should have been there. 70 is auto-populated. Block credit of car, I have reversed 10. Temporary reversal for July 2026, I have done 15, which is correct. Ideally, it should be 15. Table 4C is 70 minus 10 minus 15. How much is that? 45. So 45 hits my electronic credit ledger. And I reclaim, means for my earlier tax periods, I had parked temporary reversal, but I am reclaiming it in the month of July. In respect to my earlier temporary parking and reversals, 20, right? So now what is happening? Ideally, the electronic closing balance should have been positive 5. Positive is the main point. Here it is minus 20. How is it minus 20? Electronic credit reversal reclaim statement minus 15 opening balance. What is the further parking? Further parking is how much? 15. So minus 15 and plus 15, 0. Then I reclaim 20. Means from 0 I am reclaiming 20. So it's minus 20. It should have been 5. So ideally, what is the department saying in its advisory? Please, this 25 rupees of over claiming or negative amount, this to the extent of 25, please make the payment in your, or reverse it in table 4B2. If you have the balance in your electronic credit ledger, 70 you have, so you can add 25 to 15 here temporary. So it becomes 40. So it becomes 40. What happens? So 70 minus 10, 60 minus 40, 20. Then plus 20, minus 15. Here let us see. Here let us see what would be our amount which would hit the table 4C. I'm going to reverse how much? 25. So I'm going to reverse 25 to make it at least 0, right? 25 I'm doing it, right? So I'm adding this here in table 4B2. So it becomes 40. I'm reversing 40. So 25 is going to be reduced from my table 4C. So I am net claiming only 20 rupees, which is hitting my electronic credit ledger. So I'm reversing 25 temporarily to make this a positive number. Now, what is the balance of my electronic credit reversal reclaim statement? Minus 15 plus 40. So how much is it? 25 plus 25 minus 20. It becomes positive 5. So in the end, I have a positive electronic credit reversal reclaim statement balance of 5. But I have to let go of 25 rupees. If I don't have enough credit, I have to pay by cash. Extremely important. Kindly please go through all these slides. Similarly, we have your RCM statement. So RCM statement, what do we have? Table 3.1D is the liability. We make the payment of RCM 100. But what do? We claim the credit in table 4A2. That is input tax credit in respect of import of services. And table 4A3 is input tax credit in respect of RCM for domestic supplies. So what do? I claim more than what I have made the payment. So for example, here the opening balance is 15. This means I have either claimed extra 15 or I have made short payment of 15. So I need to make do. Either I make the payment of 15 in table 3.1D, or I reverse 15 rupees in my table 4A2, 4A3, right? So I will not be able to, in the times coming ahead, file my GST R3B if there is a negative RCM statement or negative electronic credit reversal reclaim statement. Kindly please go through these slides. Now let us come to latest GST amendments. GST on intermediary services. Extremely important. As we are aware, after 30th of March 2026, what has happened? The section 13 subsection 8, this particular section 13 subsection 8 clause B of IGST Act, what did it mention? It mentioned the place of supply of intermediary services. So place of supply of intermediary services was the location of the service provider. So if today I was an intermediary, I am a broker in India, and my party, one seller party is in India, another party is, for example, in Dubai. So what is happening? I am raising the invoice to my party in Dubai for intermediary services. I am the broker, right? I am intermediary, facilitator. So before 30th of March, what was happening? The place of supply of intermediary services. What is that? Before 30th of March was the location of the service provider. I am the service provider, intermediary, I am in India. So place of supply in India, right? And I am registered in India. Intermediary is registered in India, in West Bengal. So I need to pay out of my pocket CGST and SGST. And this particular GST amount will not be reimbursed by my foreign party. So I, as an intermediary service, I am facilitating export, but I was not getting the benefit of export rated supply. Now what has happened after 30th of March? What has happened for outbound services to foreign party? I am an intermediary. Now after 30th of March, this entire section is gone. Section 13 subsection 8 clause B. Now what does it say? Now if that section is gone, the place of supply becomes the default provision. What is the default provision? The default provision is, what is the default provision? The location of the service recipient. So the service recipient is the foreign party in Dubai, right? So what are the conditions for export of service as per section 2 clause 6 of IGST Act? Place of supply is in Dubai, because the place of supply for intermediary services after March 30th becomes the location of the recipient in Dubai. So place of supply is outside India. I am intermediary service in India. My foreign party is the recipient of service outside India in Dubai. I am receiving in dollars or freely convertible foreign currency, and I am not related to my foreign party. So this is an export of service. Intermediary services after March 30th has become zero rated export of services. Very, very, very good. But on the flip side, If I am exploring markets because of Trump tariffs, I'm exploring, for example, Africa, I'm exploring Europe, UK. So I don't have an establishment there. I need to take the help of an agent. So he will charge commission. He will connect me to foreign buyers. So he will charge me commission. So if he's charging commission, what is happening? He is giving me services. I am the service recipient, right? And he's the service provider. So now what's happening after 30th of March? He's an intermediary, foreign intermediary, because he does not own the goods, right? I own the goods in India and I'm selling, I'm looking for foreign market in Africa. He will connect me to buyers, but he is a foreign intermediary and he is providing service to me. So an intermediary service, what is the place of supply? Default, that is the location of the service recipient. I am the service recipient of this foreign intermediary commission intermediary service. So what happens? Place of supply is in India, my location, right? Place of supply in India. My commission agent, he is the supplier outside India. I am the recipient of service, of intermediary service, foreign service, commission agent services. I am in India. This is classic definition of importer service, section 2 clause 11 of IGST Act. So in this case, I need to pay RCM. I need to issue a self invoice within 30 days from the date of receipt of this service, and I need to pay RCM. I need to pay RCM of 18%, right? And issue self invoice. This is extremely important from 30th of March, right? So these are intermediary services. Now, foreign remittances from the audit perspective, if you are making foreign outward remittances, the department will always check that what are you making it in regard to? Is it an import of service by you? Are you paying RCM or not? The reason why I'm saying is that as per this particular notification 10 2017 IGST Act, it mentions the entry number 1 that any foreign supplier, he is located in non-taxable territory and he is the category, right? He's providing any service supplied by any person who is located in non-taxable territory. You are, and the supplier of service is any service located in non-taxable territory. You are the recipient. You are in any person located in taxable territory, and this becomes an incidence of RCM. So import of service. This is a classic situation of import of service. Entry number 1, notification 10 2017 IGST rate notification. In that particular case, what happens? Here you need to pay RCM. So there are many times in your PL debit side you see foreign bank charges. You are making payment, foreign outward remittances, and payment has been made via several intermediary banks. Bank of America, Goldman Sachs, there were Deutsche Bank, those foreign banks where you don't have any bank account. They have deducted foreign bank charges and you have reported it in your PL. So during audit, the tax officers will check whether you have made any payment towards foreign bank charges. So they will say, oh, acha, you made payment towards foreign bank charges. So you have availed and service from a non-Indian person, means a person outside India, and you are in India. And place of supply is in India, default 13 subsection 2. That the place of supply of this particular service is in India. So it's an import of service. So RCM as per entry number 1 of notification 10 2017, which I said, pay RCM on what? 17,62,410 was just the expense of foreign bank charges. He had to pay 3,17,234 under RCM just on this point. But he can claim input tax credit. Why? Because he can today issue the self invoice. So self invoice, if issued today, it becomes fine, right? It's fine. Like there's a particular the section which has come out, section 40, rule 47A, which we will see later on, that now there is a time limit that you have to issue a self invoice only within 30 days from the date of receipt of your particular service. So time of supply becomes then, but you can still issue a self invoice today if you are making the payment during departmental audit and claim the input tax credit on supplies received from unregistered suppliers subject to RCM, but you will have to pay interest because time of supply is 2-3 years earlier, 2022, right? So in those cases you may have to pay interest and penalty, general penalty, or maybe penalty under 122, but you can still claim the input tax credit because you have issued the self invoice, which is under section 31 subsection 3 clause F, read with rule 47A. So even though you may have to issue the self invoice within 30 days, but for previous earlier periods when this notification had not come out in October 2024, before that, you could have issued your self invoices today for any tax period earlier. You may have to pay some interest and penalty, but you can claim the input tax credit, right? Now, uh, now, for example, if you have sent goods outside India to UK for some certification or some certification or management something, and you made foreign outward remittances, so in that particular case, what happens? The department will say, "Oh, the party is outside India. You are in India. You are availing services, so kindly pay RCM," because it is a classic case of importer service. But you can save yourself by this tax planning. Is that you can mention that Section 13 subsection 3 of IGST Act mentions that the place of supply for any services which are actually performed, like for these kind of services, is the location where the services are actually performed. In which cases, where you send the goods outside India, for example, the goods need to be physically available with the service provider for him to provide the service. So in that particular case, if you have sent the goods to UK or outside India for certification, in that particular case, you may not require to pay tax under RCM. It may not be an importer service because the place of supply is outside India. It is not in India. As per section 13 subsection 3, it is where the services are actually performed. Place of supply is in UK. You are in India. So it's the place of supply is not in India. It's not an importer service. You can save yourself. Tooling cost. As an exporter, we know that we have to make dhacha, right? Mold, dies, etc. for our foreign OEMs. Then after that, they pay some money to us. We use that money, make mold and dies, for which using which we are going to make 100,000 units of export items. So once we receive any advance and if we have booked that particular revenue in our other income with the head of tooling cost, we cannot show it as an export of goods or services. This is wrong because export of goods, as per section 2 subsection 5 of IGST Act, mentions that the molds and dies and those tools need to leave India. What is the actual definition of export of goods under section 2 subsection 5? That it requires physical movement outside India. So in this particular case, what is happening? You have the molds and dies, they remain at your factory gate. So in case if they remain at your factory gate, what is the place of supply as per section 10 subsection 1 clause C? The place of supply is your factory gate. So for example, in Delhi, your factory is there in Delhi, for example, and you have made molds and dies and you've received $100,000 to make those mold and dies, and then after that you're going to make 100,000 units of exports which you are going to export, but you book the income which you've received from the foreign OEM as tooling cost. So the amount which you've received as tooling cost, it will not be shown as export. You cannot take the benefit of zero rated supply on that. You will have to pay CGST, SGST on that. Why? Because place of supply is Delhi, factory gate. You as the service provider to your foreign OEM or the supplier, you are registered in Delhi. So the tax incidence is CGST and SGST. You have to pay out of pocket, and this will not be even reimbursed by your foreign OEM. So this is a very important. Many exporters, they show the tooling cost as an export. It is wrong. Here in this notice, if you were to see, these all amounts have been received as tooling cost. Date of receipt is in 2022. They made the payment in 2023. They have made payment of interest on just this 1.90 thousand rupees because of late payment of tax of CGST and SGST. There are certain tax planning for which we charge lakhs and all that I mentioned in brief here. You can categorize your particular tooling cost. You can apportion it as embedded cost of your export items. Don't show it as separate tooling cost, right? Or you show it as a composite supply, that your particular export of goods is your principal supply, and at the same time as one contract you are receiving amount for designing or etc. in a relation to a composite supply. It should be one invoice, one contract, right? So these are few tax planning measures which I mentioned here. You can go through that. I hope we are aware that about the ocean freights. Export ocean freight, we have to start paying taxes from 1st October 2022. Are we aware of this? From 1st October 2022, we have to pay GST on export ocean freight. So export freight here, for example, if I am an exporter from, for example, Andhra Pradesh, and I have engaged a foreign shipping line, So what has happened? From 1st October 2023, this is another amendment. Earlier, the place of supply for any any ocean freight transport was the destination of goods, but this has been removed and the residual entry has come in. That is section 13 subsection 2 of IGST Act, which mentions place of supply is the location of the recipient of services. So you are the recipient of service for ocean freight from your foreign shipping line, right? So service is export ocean freight, right? Transportation of goods by your vessel. So who's the recipient of the service of ocean freight? You are in India, right? So place of supply will be the location of the service recipient from 1st of October 2023. So from 1st October 2023, if you are engaging a foreign shipping line for having any export ocean freight, if you're making any export ocean freight to a foreign shipping line, and if you're an exporter from 1st of October 2023, you need to pay tax under RCM because this is an import of service. He is a foreign party, you are an Indian party, and place of supply is the location of service recipient. You are the service recipient in India. Classic case of import of service. In case of import ocean freight, we are aware of this, right? Indian import ocean freight for FOB. In case if your foreign supplier, foreign exporter, he has engaged in FOB, you are importing under FOB. So you are engaging your own shipping line. If you are engaging your own shipping line and if you are engaged in Indian shipping line, so is there a problem? No, he will charge GST to you under forward charge. 5% without payment of ITC, 18% with payment of with claiming of ITC, right? But if you engage a foreign shipping line, you get better competitive quotes. You engage a foreign shipping line for import ocean freight. After 1st of October 2023, it becomes again an import of service. You need to discharge RCM. 10% of the CIF value will be your ocean freight value. You have to pay 5% on that under RCM and claim input tax credit with issue of self invoice under section 31 subsection 3 clause F, right? So but in case of CIF contracts, in case if you are importing goods from US and if you tell your foreign exporter that sir, I don't want to get into the hassle of arranging a shipping line, you kindly arrange a shipping line, I will pay you the freight and insurance. So you enter into an Incoterm of CIF. So in that particular case, when you are importing any goods under CIF contract from outside India, you do not have to pay tax under RCM anymore from 2022 August September. This was the landmark Supreme Court judgment of Mohit Minerals. So this you need to, because entry number 10 of that particular notification 10/2017, which I showed you of IGST, which is the RCM notification, entry number 10, that has been rescinded. So for FOB contracts, if you engage a foreign shipping line, you need to pay RCM. But if you have a CIF contract and if you engage a foreign shipping line, when you are paying import ocean freight, you do not need to pay tax under RCM, right? Now, latest litigated issues. We have already discussed this foreign commission. Now for RCM under on unregistered expenses, see, I have already mentioned this rule 47A has come in from 1st of November 2024. Here, what does it mention? It mentions that, see, your audit is happening. Okay, you are making payment today of RCM in respect of supplies received from unregistered suppliers, which you should have paid in 2022. You're paying now in 2026. So now the rule has come in, rule 47A, inserted from 1st of November 2024, which says if you have to claim the input tax credit, you need to claim it within 30th November of a particular financial year where the invoice pertains. So the invoice, you can issue the self invoice in a particular year. For example, you're making the payment today of import of RCM under importer services, for example, from unregistered party. That's unregistered party in a foreign shipping line. So you're making the payment today, you are issuing the self invoice today. Can you issue the self invoice today? Yes, you can issue the self invoice today. That invoice is a particular tax invoice under section 31 subsection 3 clause F, and in your rule 46, which is a documentary evidence, you can claim input tax credit up to when? 30th November 2027, because you've issued that self invoice, which takes the character of a tax invoice as per section 31 subsection 3 clause F. But you have to pay interest from the time of supply. What is the time of supply now? Time of supply now is become the date of issue of the self invoice. in cases of in cases of receipt of inward supplies from unregistered parties where it is subject to RCM. So in that particular case, your time of supply is the date you issue the your date you issue the self invoice, and you have to issue your self invoice within 30 days of the receipt of the service. So if today you receive you receive a service of import of a service from a foreign shipping line on your export ocean freight, for example, you have to mandatorily issue a self invoice within 30 days from the date of receipt of this service. If you don't do so, then you will have to pay interest. You will have to pay penalty under rule 122, and your particular self invoice needs to be issued in 26/27, and your last date to claim input tax credit is limited now to only 30th November 2027. It may not be claimed later in the future. So they've tried to reconcile this. You can also take into consideration this circular 2115/2024, which mentions that you can issue the self invoices later for previous periods 2022-21. If audits are happening now, you're making payment today, you issue the self invoice today for unregistered parties RCM, and you claim the input tax credit today, no problem, without dispute. Hundreds of thousands of lakhs of amount has been recovered where the department has disputed the claiming of input tax credit in these cases. Why? Because they are saying that you cannot issue the you cannot issue the self invoice today, and the invoice should have been issued in 2022 during the time of supply. No, this circular para 2.7 of the circular mentions whenever you are issuing the self invoice for previous periods today in 2026, when you're making payment, you can claim the input tax credit within 30th November of the year in which you have issued the self invoice, which takes the character of the tax invoice. So it's a very important circular. This can save you lakhs. Now another latest welcome amendment which has happened, that was rule 96 of rule 10. So are we aware of this rule 96 of rule 10? What did it mention? Can anyone tell me? In the chat box, can anyone tell me rule 96 of rule 10, ease of doing business, where can we show more cost? Can anyone tell me what is rule 96 of rule 10 in the chat box? Kindly please respond. Rule 96 of rule 10. Never mind, I'll explain. Rule 96 of rule 10, what did it say? It said that up to 8th of October 2024, in case if you have imported goods under certain beneficial concessional notifications such as advance authorization, such as EPCG, EOU schemes, means you don't need to pay import duty. Now it is deferred, or there are certain benefits under export obligation, etc., whatever that is. If you have imported goods under certain notified concessional import of goods notifications, you can only export the final product under LUT and bond. You cannot export with payment of IGST. This was rule 96 sub rule 10. This was a restriction. Now what has happened on 8th of October 2024, by a notification, they have omitted this particular rule over and all at all, rule 96 sub rule 10. So they have omitted it with a notification without a saving clause. So there is no saving clause. Now saving clause, what does it mean? Saving clause means that the particular rule has been removed as such that it never existed. So all the ongoing proceedings, all the pending appeals, all the ongoing disputes, all of those things are all rescinded because there is no saving clause. There is no saving clause. Just a moment, please hold on for a second. Mr. Majumdar, I'm in a session. Let me just allow me some time. I'll call you back. I'm in an all India session right now. Yeah, thank you. Yeah. Sorry. Yeah. So what am I saying? Yeah. So what am I saying? That without a saving clause, that notification has come out without a saving clause, that this particular rule has been rescinded. So all the ongoing proceedings, appeals which have been pending, they are all gone. So what were the disputes and proceedings which were pending? That many exporters bona fide inadvertently made a mistake. They imported goods under all of these concessional notifications, but they exported with payment of IGST. They got the refunds also through IceGate. Now, when its audit started happening in 2021, 22, 23, they started demanding the refunds of all of these refunds which you have received from IceGate under due to the violation of this rule 96 sub rule 10, along with applicable interest and penalty of crores and crores, 50 crores, 70 crores, 100 crores, the businesses would shut down. Going concern would be violated. So all of those pending cases have all been, they can all be closed now because this particular rule has been removed without any saving clause, right? So, and a Supreme Court judgment also you can quote in case if you are facing any such appeal which is or writ which is pending before any high court or any your tax authority, you can mention the Supreme Court judgment Good Luck India Limited Union of India, that this particular Supreme Court judgment, it upholds the Gujarat High Court judgment wherein it says that this particular omission is not prospective, it is retrospective. So all of the, and this particular rule has been removed without any saving clause, right? So all of the cases can now come to a rest. Now provisional refund, we are aware that as per your Finance Act 2026 which had come, right, and your 54th GST Council meeting. So what has happened in that particular case, they had mentioned about 90% provisional refund for export cases, also for inverted duty structure cases, IDS cases. For IDS cases. So in IDS cases and in both in your export cases. So in your export cases, your CGST instruction has also been issued, the law has also been amended, and the effect has also come in. So for in case if you are an exporter and if you are applying for a refund under RFD 01 for refund of unutilized input tax credit against your export zero rated supplies. So in that particular case, what will happen? You can file your RFD 01 in case if everything is in order, you are not a risky exporter. In case the particular refund tax officer, he feels that your case is not subject to scrutiny. So, or if he does not even respond within, once your RFD 02 is issued, which is your initial acknowledgement, within 7 days from the issue of your RFD 02 initial acknowledgement, your 90% of your refund which you applied for will be disbursed. Means a refund scroll will be made. It will go to PFMS and that amount will enter your bank account. And 10% of the refund which has been withheld, it will be 10% of the refund which has been withheld, it will be given within 60 days, right, under section 54 after due verification. So here inverted duty structure cases refunds, they have also been mentioned to be included in this provisional 90% provisional refund facility, but this particular amendment has also been made in section 54 subsection 6, but the particular effect has not been made, means it has not come into effect. So for IDS cases, refund 90% is still not into effect, but for export cases under RFD 01 under LUT bond, you in case if your refund file is not subject to scrutiny or if the tax officer does not respond, you would get your refund within 7 days from the date of issue of RFD 01. RFD 01 needs to be issued within 15 days of the issue of your filing of your RFD 01. So within 21 days you will get 90% of your refund. Now this is another amendment. So there was a restriction of filing of or getting refund within. Sure. So let us just wrap it up, okay, within the next 2 minutes. Then we will open the floor for question and answers. Let us wrap it up in 2 minutes. Okay, there are certain slides. I will try to wrap it up in 2-3 minutes and then we'll open the floor for question. So there has been another amendment wherein it is mentioned that in case if you made the payment, if you made export with payment of IGST, and if you've done small couriers or if you've done some sort of a particular small parcels, samples which you've sent, right? So if the refund amount or tax amount was below 1,000 rupees, so earlier you could not apply for a refund, right? But now this particular refund will come to you in case where you made the payment, all the IGST paid, this amount will also come to you. This has been, that particular thing has been removed, right? Post supply discount. So post supply discount is also important. In case if you have provided, in case you are a supplier and your recipient, okay, he has purchased goods from you, but there is no demand. So after 3 months, okay, you want to give him some discount so that he can pass on the further discount. So earlier what used to happen, that you needed to have a pre-existing agreement with your dealer that I am going to give you a post-supply discount if you reach this turnover or these conditions are met. Now this has been removed, right? This has been removed. Also, the individual one-to-one linking of credit notes with credit notes with the particular supplies, they have also been done away with. You just need to ensure that in case of post supply discounts, in case if you're giving volume discounts, if you're giving turnover discounts, if you're giving any low demand, whatever sluggish discount, whatever it is, you issue the credit note, it should be within 30th of November of the next year, right? GST credit note it should be, and the recipient, he needs to reverse the input tax credit, right, on this credit note. This is a must. Okay, so there are certain other issues also, you can go through this, wherein in inverted duty structure cases, where I've come across several cases here, litigation, wherein they are mentioning that if you've applied for refund for the month of April 2026, but in GSTR 3B of April 2026, you have claimed input tax credit of March 2026, but you have applied refund for only April 2026. You will not get the refund for input tax credit which is appearing in GSTR 2B of your earlier tax periods, which is absolutely rubbish, which is wrong. So, as per Rule 89 sub Rule 5, also, if you were to see, the net ITC definition mentions that all the net ITC on inputs which you have claimed in the GSTR 3B of the relevant refund period, right? So, GSTR 2B for that relevant period, may or may not have that particular input tax credit. Your earlier tax periods may also have that input tax credit, but you can claim the input tax credit. These are certain legal references which I mentioned. In case if you come across with such an issue, you can dispute. For inverted duty structure, in case if your main raw material output is 5%, your main input is 5%. Many tax officers, they say, we will not give you refund under inverted duty structure. Why? Because your main raw material is not 12 or 18%, it is also 5%, your output is also 5%. In that particular case, there is no definition of main raw material. Even if you're packaging, printing, dye, spare parts, if any of the inputs, if it is more than 5%, 12% or 18%, you can apply for a refund under inverted duty structure. You can take reference of these particular notifications. You can simultaneously apply for refunds under export and inverted duty structure in the same tax period also, not an issue. Many commissionerates, they were opposing that for the same tax period you're getting benefit of input tax credit, of double input tax credit. No, but the formula is different. Numerator is export for your export refund. Numerator is inverted duty turnover for your IDS refund. So in the same tax period, you can apply for different refunds. For SEZ also, you can apply for different refunds in the same tax period, different applications for export and SEZs. Okay, you can go through the remaining points. I've also mentioned certain error codes here, I've also mentioned the latest Hormuz problem. So just as the last point, in case if you have EGM filed, you received the refund also, your shipping bill is filed, but due to the Hormuz problem now, your shipment was again, it came back to India, or it went from one port to the other in India, it did not go outside. So you will have to pay back in DRC 03 the refund amount which you have claimed along with applicable interest. If you wait for the notice, then you will have to even pay penalty of 15%. In case they invoke section 74A, subsection 9 or 74, right? So kindly also give back the duty drawbacks and the road tip amounts, right? So there is no automatic, like if you cancel your shipping bill, you do not automatically reverse your refund. You need to reverse your refund by DRC 03, right? Write a written undertaking or a submission to your jurisdictional tax officer. Say that, sir, kindly please issue the order under PMT 03A that we have already made erroneous refund which we've received because this export was cancelled, right? Kindly do this. This is very important. Okay, you can go through the further slides. I have mentioned several other cases also of audit, several other real life cases of block credits, RCM. I've also mentioned health checklist. When I'll share the presentation, you can go through all of these things. These are all very important from compliance point of view, audit point of view. These are the health checklist which you should check, or your chartered accountant or your books closing during that time. Your tax department, your accounts department should check all of these things. So let's open the floor for questions. These are certain ratios which I mentioned here also.
Yes, I think thanks for your detailed and in-depth presentation and analysis. Okay, so let us move on with the Q&A session. Okay, so I
Sure.
would request all the participants, sir, would you like to start with the questions? Some of the questions dropped in the
Okay,
chat
I'll
box.
read the questions.
Yeah.
I'll read the questions. As a new exporter, how can I learn this term effectively? What term, sir? What are you talking about? As a new exporter, you need to take the IC license, your import export your license, right? Your IC code, and then you need to apply for your GST registration. You need to file your RFD 11 in case if you're exporting under LUT bond. So
Yes.
it's a specific procedure basically. As merchant
Yes.
exporters, for Nishikant Jain ji, as merchant exporters, while applying GST ITC refund, we have to file as per 54 to a jurisdictional, as per notification 41 to a as per understanding it was it that we submit to a jurisdictional as per 54 while notification 41 submitted to factory jurisdiction. So see, for merchant exporters, Nishikant ji,
Mhm.
if you have availed concessional notifications under your notification 41 2017, wherein if you
Mhm.
are purchasing from your supplier at 0.1% at 0.1% duty or 0.1% IGST or CGST, SGST, whatever, 0.1%. So in that case, what happens? You need to file for your refund for your unutilized input tax credit in your RFT 01. So in your RFT 01, you need to apply in any other category. There is no specific category which has been provided till now. You have to mention it in your any other category, I believe, and then you
Okay.
need to file that particular. But this has been changed, I think. This for merchant exporters also an amendment had come about last year, and now I think you can even apply this in under Rule 89 sub Rule 4. Earlier there was Rule 89 89 4A 4B like that. So now 89 4A 4B, I think they have been rescinded, they have been removed. So even in this particular merchant exporter case of 0.1%, you can apply with the formula of normal export under 89 sub rule 89 sub rule 4. Earlier it was sub rule 4A 4B, for which you had to apply in a separate category month wise. That was very cumbersome. You had to prove each and every input of your input service, input goods, ITC on that, one-on-one direct relation to the exports which you have made under the using the concessional these purchase of your concessional goods, right? But now I think for the last 1 year 89 4A 4B they have been removed, so you can apply under the normal category using the same formula 89 4, and you need to apply to your jurisdictional officer. Earlier there was this particular notification 41 2017. I think now it is not required after the abolishing or removal of your 9610, the time when it got removed, your 89 4A 4B also got removed. So you don't need to follow, I think, this notification 41. So you can file in your normal your normal RFD 01 in export category in normal tax period, and you may not need to comply with all those conditions which are mentioned in 41 2017, which was that you submit all the shipping bills, you submit all your tax invoices, purchase tax invoices. Those need to be submitted with the jurisdictional tax officer of your supplier. All of those things I don't think is relevant anymore.
Sir, is it possible to get some this notification regarding the thing that you have explained? Because my understanding is also the same, but the officer is
Sir,
contesting
I'll
again
just
and
show
again.
you. I'll just
So,
show you just a second. I'll just show you the law only.
Mhm.
Just allow me. Let me just show you the law. I'll just show you the law. I think this had been rescinded. So here, Rule 89. This is. I'll just show you the Bare Act. Rule 89. Just a moment, please. Yeah. Rule 89, I'm talking about Rule 89 4A 4B. So Rule 89 4 is there. Yeah, Rule 89 4. This is the normal export category rule, which has the formula which you already know, turnover zero
hmm.
rated, etc. and all. 4A 4B C, this has been removed. You can show your tax officer this. So this has been removed from 32. Let's see 32, the citation. It has been removed this. So this is the reference which you can quote. This is notification 20 2024 with effect from 8th of October 2024. Earlier, this entire story was there, which I was mentioning. Your concessional 40 2017, 41 2017. This one is 41, I think. 78, 40, 41. All of these things are removed. 4B. See, 89 4B is only removed. So your 40, 41 concessional, all of those conditions are all gone. So you don't need to follow that anymore. You can apply in your normal rule. Kindly show the notification to the concerned person. You need to apply under 89.4, which is the normal category. I hope this solves your query.
I hope the officer also understands.
No, he will. This is the law, sir. This is nothing like, any beneficial thing or something. This is the law. So this is there as per that notification. You can also quote section 37A, circulars and notifications are binding on the departmental officers. So as it is a notification, it's not a circular, so it's binding on them. So okay, as exporter, you can tell me export invoice and GST invoice, both taxable amount will be same or what? Yes, sir. So it's a very good question. So export invoice, the GST invoice, both taxable amount should be the same or not? So sir, let us see this. If it is not the same, what will happen? Just a moment, please. If it is not the same, sir, this will happen. This will happen. Here, error codes. These error codes are there with ICE gate. In case if your taxable value, port code, your EGM, invoice value, invoice date, IGST paid, taxable value, shipping bill number, shipping bill date, etc., etc., etc. All of those things, they do not match with your shipping bill versus what you have reported in your GSTR 1. So if you have exported under with payment of IGST, these error codes will come. Your scrolls for refunds will not be generated. You will not receive without trouble. You will not receive the refund in your bank account. Second of all, in case this is the case of your refund from the ICE gate. But what about the refund from the GST department? Refund from the GST department will also cause a problem. Either they will issue a deficiency memo in RFD 03 or they may issue a show cause notice in RFD 08. You may have to respond in RFD 09. Most likely they are going to cancel this. So it will be better before they issue a particular refund order, etc., or an initial acknowledgement, withdraw your appeal in RFD 01W. Withdraw your appeal in case if there are mismatches, because then again you will have to file an appeal against RFD 06, which will again be a cumbersome thing. So kindly always ensure that your this particular thing, all your invoice details are matching with your shipping bill and ICE gate details, etc. ICE gate, Mr. Jay has mentioned ICE gate on commission in case IGST on commission in case of export and import to commission agent abroad. So we've already discussed this. I'll just explain this again. In case if you are engaging a foreign commission agent, in case if you are engaging a commission agent who is an intermediary in Dubai, for you maybe a selling or a buying agent or whatever, that does not matter. But if he is a particular commission foreign agent there, and if he is an intermediary, which he is, in that particular case, what happens? The location, he is the service provider, you are the service recipient, right? Now what happens is, for intermediary services, the earlier place of supply rule was section 13 subsection 8 clause B, which has been omitted from 30th of March 2026 when the president assented it, right? So from 30th of March 2026 onwards, if you are engaging any foreign agent who is an intermediary, foreign agent, commission agent, intermediary, he is what will happen? The place of supply will be the default provision. The default provision is section 13 subsection 2, which is the recipient, location of the recipient of the service. So you are the recipient of the service. Your location is in India. So the place of supply for this particular transaction will be India. Supplier is outside India, recipient is in India. You are the recipient. So it will be an import or service under section 2 clause 11 of IGST Act as per entry number 1 of notification 10/2017 of IGST rate notification. You have to pay RCM under 18% and you have to issue self invoice because the other party is unregistered. As per as I mentioned, as per rule 47A, you need to issue a self invoice under section 31 subsection 3 clause F within 30 days from the date of receipt of this service. Now the other side is, in case if you are the intermediary, Okay, or if you are engaging someone who is in India, he is the intermediary. So in that particular case, what he will issue, if he is issuing a particular invoice to the foreign party, so in that case what is happening, he is the intermediary, service recipient is the foreign party. So place of supply will be the recipient of the service, will be outside India. Export conditions, 6 conditions, section 2 clause 6 of export of services, that place of supply is outside India. Yes, it is outside India under section 13 subsection 2 default condition. Recipient of service is outside India, right? You are the Indian intermediary, you are providing seller whatever commission agency services, okay, to your foreign party, right? So in that particular case, you will be benefited by classifying that sale as a zero rated sale. So you can file an LUT bond, you don't need to pay any tax. But before 30th of March, you had to pay CGST and SGST out of your pocket. Taxable amount of RCM put wrong in 3B, but tax on RCM is correct. Taxable amount of RCM put wrong in 3B, but tax on RCM is correct. Okay, so what I assume is 30th November has already passed, right? So now you cannot make any changes, and your 99C also, I think if it's pertaining to your 25-26, you can still make the changes. Right now, you can make the changes right now in your GSTR 3B, or if not in 3B, you can make the change in your GSTR 9, table 6, table 6E, like E and F, around that, where okay, you need to mention the tax amount, taxable value, tax amount, or the input tax credit. Basically, you need to mention that there in your table 6, which you have claimed, right? So you can rectify that. But I don't think taxable amount, if you reported incorrectly, should be that big an issue, because if you paid the tax amount correctly, see rule 36 sub rule 4, what does it say? It says that it does not matter whether your input tax credit under RCM comes in your GSTR 2B or not. If you have paid tax under 3.1D in table 3.1D in GSTR 3B, you can claim the input tax credit in table 482, 482 or 483, which is your ITC on import or service, like basically ITC under RCM import or service 482, and 483 is domestic supplies, right, of RCM. So not a problem, sir. Kindly make the changes in your 99C if that is passed also. I don't think it should be that big an issue, because when you are going to submit your reconciliations, your tax amount is correct, not a problem. Will recording be available? Presentations, sir, we will share with FIEO. FIEO shall share with you. As you discussed, tooling invoice is other income. So should I make an invoice with CGST? Yes, sir. So this is a very CBF component, sir. Here, since your place of supply for mold and dies or tooling cost which you made, right, you cannot export it. It's hundreds of kgs, right? So your place of supply for delivery of any molds or dies for which there is non-movement of goods. So place of supply as per section 10 subsection 1 clause C of your IGST Act, if you would see, it is the factory gate or where the effective ownership is transferred. So you are transferring the effective ownership of your molds and dies on the factory gate in Delhi or in Maharashtra or in Howrah. So what is happening? The place of supply will be the location where the effective ownership is transferred, where there is non-movement of goods as per 10(1)(c), right? So in that particular case, place of supply is your factory gate. You are registered in that particular state, so it is CGST, SGST. You have to raise an invoice of CGST, SGST, and you have to pay tax under CGST, SGST. And in case if you are unable to tax plan this or tax structure this with your foreign OEM earlier, I would advise discharge the amount, once you receive the advance, in the same month, because time of supply is already triggered, right? But you can do tax planning also. I've mentioned in a one slide, how you can do tax planning. You can dive deeper, or you can get in touch with us also. We can help you with that. And in case if you're unable to do so, kindly raise an invoice, yes, and report it as an intrastate supply. Okay, email addresses are mentioned. Okay, all right. Okay, email addresses are mentioned. You can stay connected to us also, not a problem. I had mistakenly filed an incorrect invoice in December 2025 where the IGST amount was, I had mistakenly filed an incorrect invoice, okay, where the IGST amount was lower than the actual invoice and shipping bill amount, okay. I received the IGST refund based on the GSTR 1 amount, okay. I subsequently amended the invoice in the following month, but I have still not received the differential IGST refund. So, sir, here what has happened is I have mistakenly filed an incorrect invoice here. But what is happening is you may not, if this particular case you have if you have amended in a way, you have, what do you say, filed a debit note, of price escalation in a way. So earlier your actual export amount was 200 rupees, but by mistake you reported only 150. You paid tax less, you got that refund. But after that you had amended the correct amount of your export, right? You made it 200 by issuing a debit note of 50, right? Or you amended your shipping bill itself, either which case. Okay, so you have again made the payment of your 50, your IGST on that 50 rupees, right, to IceGate. But you will not be able to get that refund from IceGate. In that particular case, there is a circular called circular 226. So in that case, what you need to do is you need to pay the interest for the remaining period, like for a month or 2 months or whatever. I think a month would be here. You need to file an RFD 01, and you need to fill up the annexures there. You need to fill up the supporting documents, and you need to apply for a refund of IceGate through GST portal. So for this, there is this particular category. Any other category needs to be selected. You can refer to this circular. I can even show you this circular. Just a moment. If you can see my screen, I can show you this circular 226, this one. So in case if you have exported with payment of IGST, and if you have subsequently made the payment due to upward revision of price, or maybe due to correction, etc., and all that, so you will not get the refund of the IceGate paid on the upward revision or upward amendment which you have done so by your issuing of your debit note. You will have to follow this particular circular. You have to apply for refund in RFD 01, right? You can go through this circular, sir. It's 226/10/2024. Okay, next question. Okay, I mistakenly advanced. This is we often pay to foreign entities. We often pay to foreign entities for exhibition bookings. Is RCM applicable on such transactions? So, sir, if you are paying to foreign entities for exhibition bookings, so now you need to understand the law here. If you were to see the law for exhibition bookings, if you were to see, that is your place of supply. If you were to see, just a moment, your IGST Act, what will be the place of supply? Let us see in your IGST Act. Here. In your IGST Act, your section 13, here if you see exhibitions, here. So the place of supply of services supplied by way of admission to organization, cultural, etc., or exhibitions shall be the place where the event is actually held. So the place of supply for this particular service which you are receiving is the place of supply where the event is actually held. So is the place of supply outside India or in India? You need to first see that. So clearly, as per section 13 subsection 5 of IGST Act, place of supply is outside India. If place of supply is outside India, is it an import of service as per section 2 clause 11 of IGST Act? No. So you can quote this particular section, section 11 subsection 5. You don't need to pay any RCM, sir, because the place of supply is not in India. It will not come under the default provision of the location being the recipient of services. No, it will be specific, section 13 subsection 7, which we are seeing, right? Let us see the next question. We often pay as a merchant exporter. Can we purchase 0.1% and export by charging GST 5%? Yes, sir, we can do that. So 0.1% you can do that now, sir. Even if you purchase under 0.1%, this rule 96 sub rule 10 is gone. Section 80, rule 84A 4B have gone. So you can now purchase at the concessional rate. You can export at the rate of 5% with payment of IGST also. Earlier, you had to only make export under LUTN bond for cases where you have purchased any goods under concessional rate. But as I mentioned, that from 1st of October 2023, which we just saw, or 24, whatever it was, that notification also had shown that now you don't need to worry. You can export with payment of IGST also, and you can get the refund in either of the ways through IceGate also, and you can apply also in under RFD 01. Taxable amount of RCM put wrong in 3B, but tax on RCM is correct. So we've already discussed this. So we've already discussed this, sir. Even in case of 20, so it's nice, it's not rectified, not a problem, sir. So long as your amount is correct of your RCM, so it is fine. Your taxable amount is incorrect to the most harshest of the harshest. They may charge a general penalty under 125 or 25,000 each under each act, but it's very harsh. I don't think that they should do that. But if your tax amount is correct under RCM in table 3.1D, you have not claimed, you've not overclaimed, you have made at least the payment of RCM, whatever is there. You at least made the payment of RCM. You at least made the payment of RCM as per your supplies which are appearing in your GSTR 2B. So in your GSTR 2B, if RCM supplies are appearing 50, for example, so you have to make payment of RCM on supplies more than 50. That's one validation. Second validation is you cannot claim input tax credit in 482 and 483 more than what you paid in 3.1D. These are two different validations of RCM. So your case does not come in that. That's not a problem. So we've already discussed the RCM apply on foreign commission. Yes, if you have a foreign commission person outside India, so there will be RCM incidents. You have to pay tax under RCM from 30th March 2026 because the place of supply of intermediary services that's been removed. Like it's now come under the default provision. I can see CAs attending, which goes on to show how complex GST computation is. Even my CA struggles with this. Few should take it up with governor to simplify this. This cannot afford. I appreciate the concern, Sandeep ji. It's
That's
been
an interesting
increasingly
question.
complex, and FIEO has been in the forefront to take up these sessions. In fact, we have covered 150 slides in my presentation in 1 hour 40-50 minutes. You will have the entire presentation with you. So you can go through all of that. Plus, my details are mentioned. You can anytime get in touch with me. I'm also the National Managing Committee member of FIEO. So I take it up on myself to be a duty to resolve queries and problems. If you have any, you may get in touch with us. Thank you. And FIEO is actually taking these.
We will share the presentation with, just would like to mention that we would share the presentation with all the participants along with the contact details of Mr. Tulsian. We will give you his contact details as well as the presentation, both. Okay.
Sir,
So not an issue. Sir, if you can, do you find any more questions in the chat box?
So one
I think there
questions
is
are there. I think.
another one. Yeah, a couple of more are there, sir. If you may please take those.
Yeah, I'll just take it. I'll take it. Sir, I asked earlier, export invoice and GST invoice should be the same. I did not mean it's error to mention GST. Can you please let me know when I will export goods in that time? My co-export invoice and GST invoice amount will be the same. So see, your final commercial invoice, not the provisional commercial invoice or whatever, your final commercial invoice, the amount from which that particular invoice is the final commercial invoice, the amount of taxable value, the amount of tax, the rate, port code, shipping bill number, all of those things of your final commercial invoice, they should match with your details mentioned in your GST returns, should match with your shipping bill. In case if this matches, you get your refund of IceGate, you get your refund without any show cause notice, barring there are not other issues. That is not a problem. So your final invoice details should match. There are many provisional invoices, there are moistures, dry metric tons, there are other things also, but your final commercial invoice amount should match. We received show cause notice stating that we took credit from one of the suppliers who was involved in fake. Yes, department asked us to pay for ITC this amount 21,000 as they issued regardless of the company's regular and monthly payment. This is so. See, I've already mentioned. See, due to paucity of time, I can't go through each and every slide, but I've already mentioned here. If you were to go through the slides which you will get in the presentation here, these are the slides which you need to refer to. Just a moment. Here, fake invoicing. This is Ecom Guild Coffee Trading. You need to mention to your tax officer or appellate authority, sir, I have the way bills, I have the consignment notes, I have the payment slips, I have the bank payments, receipts where I made payment to the transporters, made payment to the suppliers, I have the inventory records, I have all of those things. And my entire trail you need to make from the point of purchase to the point of sale. And then only, you can take the benefit of this Supreme Court judgment of Ecom Gill Coffee Trading Private Limited, which mentions on facts and circumstances you can prove your case. So ad hoc, if supplier is not genuine, it does not matter. You can take the reference of this particular case law, Shiv Enterprises, which mentions it's a doctrine of impossibility. You cannot control your supplier's supplier, right? Plus, supply is non-existent, non-genuine. Hence, bogus purchases are bogus. Does not matter. If their GST registration had been cancelled suo moto from a date after the date of your invoices, it makes your case stronger. There are several cases like that. I've also mentioned here. Registration is cancelled on application by the supplier. If the supplier is suo moto cancelled, so you can take the reference of this particular case. In case your supplier department has cancelled it after the date of your invoices, purchase invoices, you can take the Shanti Kiran India, you can take this particular Delhi Supreme Court case law. This is a Supreme Court case law. These are extremely powerful case laws. You can take the legal reference of. In case if your registration has been cancelled from the date before your date of invoices, still it's a strong meritorious case where you can take the reference of Gargo Traders, LGW, Sanchita Kundu, Suncraft Energy, Supreme Court. You can take all of those case laws, and you can in fact take all of these references, mention all of these, provide all of these supporting documents to prove that it does not matter if my supplier or my supplier engaged in any fraudulent activities with some third party, but with me, I have received the goods, I have all the documents, I can prove that I have received the goods and what is the trail of the goods. So kindly refer to these particular case laws which I mentioned here. It's a part of the presentation. Handling fake registration, invoicing, all of these things. These would be directly relevant, very relevant to you, sir. Okay, we received. I am from head office. Received a GTA invoice and paid tax on RCM basis. Now we want to transfer the expenses to one of our branch through. So you have to take an ISD registration because you're from the HO. You have to take an ISD registration in the state of the HO, and you need to raise invoices from the HO to the ISD. So once you first need to figure out that which are the common expenses. So if you mention RCM is also covered for the last 2-3 years. So if this GTA, if you can prove that this particular GTA, this particular goods, if the input tax credit is a common credit across your several units, may not be all your inputs, your units, but other inputs also, or a specific unit or a branch. So what you can do is you can pass on that particular credit by issuing an invoice under ISD, take the ISD registration, pass it on, and then file those particular returns, and then that particular input tax credit will appear in your electronic credit ledger of that particular branch, and that branch can take the input tax credit. But you need to be very vigilant, because during your GST audit at the branch level also they may ask you the documentation for your common expenses. Why is it common expenses? How is it split between different branches? So you need to ensure that it is done in a very scientific manner, proper manner. But you have to do it with ISD registration. Thank you so much. Thank you, Devji. Thank you, Devji. Thank you, Sandeepji, for your kind words.
Mr. Mr. Manish, I find one raised hand. Mr. Manish Todi.
Yes.
Do you have any questions for Mr. Tulsian?
Thank you for the insightful presentation. So one question from my side, that right now we are exporting under refund mechanism only, and I just got to know that we can even apply for refund under LUT mechanism. So what is the process? Like they will ask for all
just
the
RFD 11, Manishji, just nothing else. Just file your RFD 11, nothing else. You file your RFD 11 either by the 31st of March of the previous year, in case if you are an ongoing exporter under LUT bond. But if you want to start exporting under LUT bond a certain consignment, file your RFD 11, not a problem. Then in your shipping bill, kindly mention you are exporting under LUT bond. First thing. Second thing is, kindly in your commercial invoice, which is your export invoice, you need to mention on top that you are exporting under LUT yeah, bond, you have to also mention the RFD 11, which is the LUT number, the bond number. You need to mention that. Once that is done, as I was mentioning earlier, you need to ensure all your port code, shipping bill number, shipping bill date, taxable value, tax rate, tax amount, all of those things which you're not making payment of tax also, you report properly. But there needs to be parity with your commercial invoice, final commercial invoice, your shipping bill, EGM needs to be filed. You need to have your bill of lading. All of those things are in consequence and all that. Those need to appear in your shipping bill. Now on IceGate portal, you go to shipping bill inquiry. You click that. You type in your shipping bill number and your port code, like CCU, whatever it is. Then they mention even the invoice number and the details, taxable value, tax amount, other things are there and all that. You need to ensure that EGMs are filed. All those things are there with you. You don't need BRCs or FIRCs, etc. for refund. But you can start it. It's easy. Now, with section 54, subsection 6, as I mentioned, with rule 91, sub rule 2 being amended, 90% of your provisional refund can be also received within 7 days from your RFD 02. So it's become easier. Earlier, they would sit for months and months and all, but they need to, as it is, issue the refund within 2 months, because the department, after 2 months, they need to start paying interest at the rate of 60%. No officer will take that on us. You can start that. It's easy. It's not a problem. If you don't have a problem with blocking with your funds, blocking your funds for more than 1 month, in IceGate, you get your refund within a month. But under RFD 01, there is an issue. You may have to wait. But now, as I mentioned, provisional refunds have come. So it's the same thing. It's automatic refund that way also.
With RFD 1 or RFD 11?
RFD 11 is the LUT bond application for one time in a year to enable you to exercise this export under LUT bond. But RFD 11 is the regular exercise wherein you file your refunds.
Okay. Thank you. We'll connect separately. I'll call
Sure. Thank you.
Yes, you can connect with Mr. Tulsian anytime, because I think you are also from Kolkata, Mr. Manish Todi, if I'm not mistaken.
I met him in many FIEO forums. So
Yeah. So, anyways, any more questions from the participants? Sir, I would also request if you may please recheck the chat box. I don't think there are further questions, but anyone with raised hands? We have already exceeded the time which we had to because of such a detailed and insightful discussion. It was really a great learning experience for all of us as well. Any more questions from the participants?
Sir, I believe for the tooling one which you're talking about, so as you said, tooling invoice needs to.
Okay, this is one.
Tax. Yes, you need to make an intrastate invoice and you need to report in 1 and 3B. My question is, tooling invoice have to make USA. Yes, you can send it to your USA party because you are charging him in a way, but you will pay out of pocket. No foreign OEM will pay you 18% of what is decided. Like your contract will not have that 18%. Or if you want to plan it properly, either you plan by embedding those costs in your main export products, or you show it as a composite supplier, whatever, or you mention it in your contract with your foreign OEM that, sir, we will charge 18% because that is out of our pocket because it's intrastate supply. So amount party will pay. Then, sir, if amount party is paying, then no problem to you. Then if the amount is paying to the party, it's a B2C. It's a B2C supply. It's not an export. It's a B2C large, more than 2 lakh, and intrastate B2C. You need to report in GST 1 and 3B. Intrastate large, B2C, intrastate large, not intrastate, sorry. Okay, I believe mostly we are done.
Yeah. Any more questions? I don't think, sir, there is any further questions. One new, another one has put up. Okay, that's in participants. Otherwise, we will move towards closing the session. Anyone would like to raise any more questions? We can take just a couple of more questions. We have already exceeded the time limit.
Voting goods on DFI for paying 5% IGST in sale is on 5%, but as IGST is charged on CIF and duty, IGST input is higher than output. As purchases duty-free authorization, so can we claim refund on the same? So you are basically availing the DFIA and all of those things, EPCG and those concession notifications. So now after 8th of October 2024, you, in case if you're exporting, right? So you can apply under the normal category. You can apply. So there is no barring of Rule 96 sub Rule 10. So you can file for refund under RFD 01, which earlier you could, and you can even apply for refund with payment of IGST through IceGate. So you can get the remaining amount, whichever you are importing, etc., like on CIF, etc., and all of these things which you are mentioning. Whatever input it is, you will get the refund. That's not a problem. You will apply in whichever two. You have both the options. That's not a problem. Yes, Mr. Jay, I've responded. You can apply,
Yes, sir.
under both the rules, because from 8th of October 2024, Rule 96 Sub Rule 10 has been removed without any saving clause also. So prospectively also, if you see that earlier you were only limited to apply for refund of unutilized input tax credit only under LUT and bond. But now you can apply with payment of IGST also, because Rule 96 Sub Rule 10 is gone. So under Section 54 subsection 3 clause 1, which is there, that you can file for RFD 01, basically RFD 01 with payment, without payment, and with payment both, basically. RFD 01 will be without payment, and normal IceGate will be, which is with your payment of your IGST, which will be your normal IceGate refund. Not a problem with that. Okay, thank you. I believe if there's any further question also, you can connect with me separately. Thank you everyone for making this a very interactive, insightful, impactful session. And thank you everyone for joining in and staying in till so late. We would like to thank FIEO and the board, Arnab also, for being the backbone of this entire session. Right, for the last 2 months, he's been ensuring that participants join, and he's been in very smooth and seamless coordination with all the participants and with me. So thank you, Arnab. Thank you to all the participants, and let us stay connected, sir.
Yes, surely. Thank you, sir. Thank you very much once again for joining with FIEO for this session. We had done so many sessions in Kolkata, so those memories came back to me right now today. So it's really always enriching. It's a knowledge for us as well to always engage with you and take forward such sessions. Thank you once again for your detailed, in-depth analysis, presentation, and insightful discussions with practical scenarios, court cases, references to help out our exporters as we progress through GST. As GST progresses towards the completion of 10 years, 9 years is already done. We are moving towards 10 years. So hopefully we will get your cooperation in the coming days as well. We will share the PPT along with your contact details to all the participants, and they can connect with you through FIEO or through they can, if they wish, they can get in touch with you separately as well. Thanks to you once again, sir. Thanks to all the participants for for staying with us so long. We have exceeded the time limit by almost an hour. It's 6 p.m. So, but we had to. It was really pleasing. It was really heartening to do it, seeing the interactions. And I think much before the Q&A began, this session proved to be successful because during the course of your presentation, the questions you had asked, I think it was 100% ratio. All the answers were correct. Yes, so, which shows the awareness among the participants as well as the attention they were paying to your presentation at the same time. It's always pleasure to have you. In fact, learning curve for us as well. I personally learn through your sessions and go through your presentations. So thank you. Yeah. So thank you once again. Thanks to all the participants for being with us. Thank you so much. Thank you, sir. Thank you.
Thank you.